by birth. Do you see that sign? The brand shall remain nameless, but I like the sentiment. Maybe we should get t-shirts for the next conference for everybody saying that. So I had a few comments that I jotted down because you'll be relieved to know that I'm not an economist. I'm not a central banker. I'm not a technology guy. But I work in that diplomatic space and particularly exposed to the intersection between business, policy, and of course, most importantly, our citizens and the people who we're here to serve and who I'm here to serve. And the reason that I left my house at 4:30 this morning with a spring in my step. And I left my house with a spring in my step because every time I come back to Lagos, I get a bit of the Lagos buzz. I think we all get it a little bit. There's a bit of a vibe going on here. And I should also say that for next year, Ireland will mark 65 years of diplomatic relations with Nigeria. And I'll let you in on a little secret. That I'm sure you won't tell anybody, is that Ireland actually sent a diplomat here before Nigeria declared its independence. Such was the closeness of the relationship between Ireland and Nigeria. So you won't be surprised to know that our Prime Minister himself came down for the event here in Lagos, the independence celebrations. And you won't be surprised to know that we had a garden party for him, to welcome him to Lagos. And 1,500 people turned up in the garden of St. Gregory's School to welcome the Irish Prime Minister. And he looked at all these people and he said, who on earth are all these people? What are they doing here? And a very famous gentleman was there to greet him called Father Dennis Slattery, who some of you might have heard of. And Father Dennis Slattery said to him, this is half of the people who are here to meet you tonight. And he said, where are the other half? And he said, they're across in St. Finbarr's and they're going to come later. So our history here is a long history. So for me to come here is always special. And I think there's a little bit of Lagos that will always be connected with Ireland. And we don't have to go very far in Ireland to have that very special connection with Nigeria. Because one of the differences 64 years ago was that we didn't have a Nigerian community in Ireland. But today we have a Nigerian community north, south, east and west in Ireland. And probably many of you in this room have classmates, family members or neighbours who are living in Ireland, who are indeed working in the very technology sector, which is so important to both of our economies. So you won't be surprised to know that education is at the heart of Ireland's development. And if you think that we got our independence just 40 years before you did, so 40 years later Nigeria gets its independence, and we are in a position now where we're 105 years independent, where we think we're beginning to realise the fruits of that independence, and we're beginning to try to achieve our potential, probably for the first time, almost in 1,000 years, to fully achieve our potential. And a very important element of that independence struggle for us was to be treated equally and to recognise the equality of our partners around the world. So the way in which we operate, you will see consistently, is that we look for partnerships in Ireland. Because we're a tiny little place. You know, you can fit 14 islands of Ireland into Nigeria. Richie, 14 times you can fit Ireland into Nigeria. So therefore our approach has always been one of partnership. Our approach has always been, let's get our heads up, look around and see where we can find common ground with other people. We've always tried to do that, and I think it's particularly places us very well in the technology age. And I'll just say to you one or two little things about that. One is, of course, that like in Nigeria, our technology space and our technology sector is underpinned by a commitment to education. We have the highest number per capita of any country in all of Europe of young people who are studying STEM at third level, number one. Number two, we have the highest proportion of third level students per capita of any country in Europe, full stop, who are attending university. Now you won't be surprised because when you look at the Irish influence in this country, it's all schools, isn't it? It's education. So not surprisingly, this is the one little advantage that we have when we didn't have all the other advantages maybe that other countries had. One of the obsessions we had, and we share with Nigeria, if you like, is about our education. So this has really spilled over very well in the post-industrial revolution world to the technology age, because technology is all about your openness and your willingness to work with partners, the education and the readiness of your society to adopt new technologies and to really build world-class collaboration. And Ireland is only a small little place. I just keep repeating that to you. So we don't claim to be the best at anything really, but there's one or two things where we're really, really in an interesting position. And one of them, many of them will surprise you. They surprise me every day. So I'll just give you a couple of them, if I may. One is that we're the 6th largest exporter on the planet of financial services. 1% of the population of the European Union. There's 193 countries in the United Nations, and Ireland is number 6 on the planet in exporting financial services, which is really kind of interesting, isn't it? Isn't it very interesting that 17 of the world's largest banks have their European headquarters in Dublin? Not just in Ireland, but specifically in Dublin, in one particular location. So it means that our central bank equivalents and our banking equivalents have had to be at the forefront of all the innovations that Richie and other people have been talking about and you'll be learning more about today. So it means that we are a magnet for foreign direct investment. We get far more foreign direct investment than our geography, than our size, or than our history would suggest that we should get. We get perhaps 10 to 12 times more direct investment than we should get on paper. But because of our collaborative approach, because of our openness, because of the talented young people that we have, and because of this educational levels of achievement that we have a very, very successful global financial sector. And what we've built on the back of the global financial sector is, of course, an indigenous sector. So if we just click, actually, I'm telling myself to click here. If it's up, it's gone, is it? It's the clicker. You can tell me if it looks like it's working. You're going to knock it up there for me. They used to tell me when I started out in this job, they said to me, never work with children, animals, or technology. So I failed miserably on all counts, but we'll do our best today. So if you take the point about the innovative and the innovation hub in Ireland, you can read those things yourself, but I'll just shoot through them a little bit if I can, and just show you, I'll come back to a couple of them, but I'll just show you that point about where we said about on the technology side, on the fintech side. So we're the 4th largest exporter of financial services in the EU. So that's not including life insurance and pensions. And Ireland is the location for one of the largest pension funds on the planet. It's not some of the largest cities in the world that you know very well. It's actually Dublin in Ireland. And one of the reasons, of course, is the colonial legacy that you have and that we have, that we're speaking English to each other. The second one is that we have a common law legal system, and we share that with each other. And the third one, I suppose, from our perspective, and it's very important for us around where we are, is also the stability that we have. So Ireland's been a democracy since the day we received our independence. Our economic policies haven't dramatically changed, I would say, in almost 50 years. We're a small, open economy. We had a trade war. We had a trade war, can you imagine, with our big neighbour in the 1930s. It didn't really end well for us, I would have to say. So we realised and we learned then that rather than closing our doors, in fact, we had to do the opposite. We had to try to build trading partnerships. And it's really interesting at the moment. If you look at everything that's going on in the world, and we're hearing about instability, and we're hearing about changing investment climates, changing tariff rules and everything else, Ireland is firmly committed to an open market, open trading, and that's why the membership of the European Union, for example, is so important to us. And that's something where we are very deeply committed to. So we work with a whole range of companies. You'll see there some of the RegTech companies that we have, but you see also right across other sectors. Many of those companies are already working in Africa. Many of them are running on the various platforms that people are working on here in this room. And I think one of the features of their work here is around their collaborative approach. And because of our European Union membership, and because of our central bank innovative approach, I suppose, we've had a sandbox for many years in the fintech space. We've had partnerships with fintech and payments associations around the world, and it was nice to say hello to Martin there from Ghana a few minutes ago. We've had a connection here with the guys in Nigeria. We have it in Hong Kong and Singapore, where I was based. We have it literally all over the world, and what we're trying to do all of the time is to build those kind of partnerships. So I would say that one of the most interesting things for me as a diplomat, and one of the things that I hope I've reflected, or hopefully I'll continue to reflect during my time in Nigeria, is that one of the things that I really love about Nigeria, and I suppose we like to see some of that reflected in ourselves in Ireland, that we really don't get knocked off course very easily. You know, the tech doesn't work. The whole world doesn't come to a halt. We have a power cut. The world doesn't come to a halt. We get on with things. We're used to barriers coming in our way. If you had a starting point in Ireland to say that 102 years ago you were going to try and build your own state, that you were going to try and leave what was a big, very successful empire, you probably wouldn't have started if you saw all the roadblocks were ahead of you. Maybe in Nigeria you mightn't have started if you saw all the roadblocks were ahead of you. But guess what? We've both kind of found our way along the road. I would say that the road is not a straight road. It's not a direct road. It's a winding road on the way. And one of the phrases that we have in the Irish language, I know you've so many beautiful idioms in all of the many languages in Nigeria, but when we're looking for inspiration in Ireland, we'll often look to a word in our native language or a phrase in our native language. And we have a lovely phrase in the Irish language. We have a phrase in the Irish language for everything, right? And in my job, it's great to have them, but we have one that really, really, really is popular with people. And I'll just share it with you if I may, and it's Gurrin Bert on Boher. You have the same phrase up in the Highlands of Scotland, Gurrin Bert on Boher. So it means two people shorten the road. In other words, if you go on your own, good luck with that journey, it'll be difficult. But if you've got somebody with you, it's a little bit easier. And I think that's our approach into how we do things. And if you think that in the World Competitiveness Yearbook in 2024, there was one country in the world who led the way in the openness of their cultural approach in a business context. There was one country in the world that led the way for openness of its culture in terms of business partnerships and business knowledge and doing business with them. And it was the little place that I'm from. Now, I also see the place where I live and where my family are here, I see similar openness here. And I see a readiness to partner, a readiness to adapt. I see fantastic flexibility, and I see a kind of innate resilience and innate toughness that you mightn't see so much because you live here and you're used to it. I can tell you, coming in from outside, that this is really a refreshing thing. This will really stand to Nigeria. And from our perspective, and I speak also with my friends in the European Union, there's 19 European Union missions here, and then we've got all our like-minded colleagues as well who are here. And all of them share the enthusiasm for this, for the potential partnerships with Nigeria. And it's to everybody's benefit. Because guess what? We're not competing with Nigeria on anything. So there is no policy experience that has taken place in Ireland or in the European Union or in our like-minded countries that we're not ready to share. And guess what I would do if I was trying to forward RegTech policy, if I was trying to navigate my way around the system? I'd find people who've done it before. That would be my starting point. I'd say, I wonder who's done that before. Let me go and find them. And I can tell you the doors of the diplomats in Nigeria are open, because this is a win for them to be able to connect with the private and public sector in Nigeria, and it's a win for you also. This is a non-competitive space. You're big boys and girls, you can compete with the private sector, but the diplomatic service, I should say, is at your disposal. But sometimes you need to take that step to do that. I want to thank you so much for the warm welcome here today. You know, before the very snappily attired MC comes up and throws me off the stage, when I was coming down here this morning, you know, I was my youngest daughter is doing her school exams this year, this week. So I was kind of wondering what she was doing today, and I was asking her last night, you know, what have you got on today? What will you be doing while I'm in Lagos? And she said, oh, I have to go in to defend one of my essays to the teacher. And she said, I don't understand why I have to defend it. I've written it already. Does that sound familiar to you? People they don't want the contact, just want to click things in. I said, so don't worry, you'll be great. And I told her a true story. And in the 1980s, a man called Andy Lopata, remember the name, Andy Lopata, he wrote a book about the things that people were most frightened of in their lives. He asked them, they did a big survey in America, and they asked people, what are the things you're most frightened of in your whole life? What was the first one? Walking into a room full of strangers. Sounds familiar? Second one? Public speaking. Guess what the third one was? Dying.
Inter-African trade better. However, these fragmented systems and the regulatory silos, high cost and vulnerability of illicit financial flows continue to hamper the progress we hope to achieve. So to harness this potential, we must align our regulatory and compliance ecosystems through strong, risk-informed partnerships. Effective PPPs are essential to build a secure, efficient, and trusted cross-border financial infrastructure. Now the imperative for financial integrity. Financial integrity is just not a compliance tick check boxes. It is an essential for attracting investment, enabling trade, and safeguarding our national security. Trust, built on transparency, collaboration, is the new currency for growth for all our financial systems. Therefore, public-private partnership in financial intelligence will definitely help us to deter IFFs, illicit financial flows, money laundering, terrorism financing, and proliferation of financing. Nigerian Financial Intelligence Unit, regulators, supervisors, and private sectors, we must collaborate to prevent the abuse and misuse of the financial system. Now, as a staff of a financial institution, we need to know the key role that the financial institutions in all our countries are definitely playing in this particular issue, which is the theme of this year's conference. You will recall that Financial Action Task Force Recommendation 29 required that every country must have an FIU, which is a central agency responsible for receiving reports from financial institutions, analyzing this report, and disseminating intelligence to law enforcement agencies, corporate supervisors, and regulatory authorities. So FIUs like our own NFIU are linked between the private sector data and the public sector enforcement and oversight. We serve as the gatekeeper for financial intelligence. Through Egmont Group of FIUs, we are connected to exchange intelligence securely and effectively. What is happening is that there are agencies and organizations, government agencies within the country are not making the best use of their FIUs. These are tools for financial intelligence exchange which are grossly underutilized. At FIUs, we are not just analysts of data. We are enablers of risk-informed policies and actions because we generate typologies and trends and patterns that we see from over a period of a fraud pattern that will help even the private sector owners, the regulators to come up with policies that will safeguard the financial system. Through Egmont Group, FIUs facilitate secure cross-border intelligence exchange. So, I am a vice chair in the information working group of the Egmont Group, and at the Egmont Group, the IEWG is responsible for advancing cross-border collaboration, timely and trusted FIU to FIU information exchange. We are enhancing information exchange platforms, strengthening typology studies and sharing them, promoting PPP models globally. So, African intelligence FIUs are playing a rising role in shaping this agenda. We are very key, and that is why we look up to our own competent authorities within our own jurisdictions to leverage on the power of what FIU can do to help mitigate the challenges we are facing with our financial systems. The NFIU, as you said, just as I say with other FIUs, we are very prominent in the hierarchy of Egmont Group. Like NFIU for the past 3 years have been receiving certificate of recognition and appreciation from the Egmont Group. The vice chair is one of my colleagues. I am with the Information Exchange Working Group, and we have our own staff working with the Secretariat, with the Egmont Secure Web Administrator. The NFIU, as you said, we need to know that just as other countries have their own FIUs, is a central agency responsible for receiving report from reporting entities, and you can see various types of reporting entities from banks to designated non-financial institutions and professions. We generate intelligence, we disseminate some of the strategic ones to the supervisory authorities. If it is tactical and operational intelligence, we send it to the law enforcement and anti-corruption agencies. So we are responsible for coordinating activities of AML-CFT in Nigeria. By the Money Laundering Prohibition Act 2022, NFI is the secretariat of the Interministerial Committee, which is the national apex body responsible for AML-CFT in Nigeria, headed by the Attorney General and Minister of Justice, Minister of Interior, and Minister of Finance. So cross-border risk and opportunities. We are all aware, Africa becomes more connected. We must address shared risks, from trade-based financial crimes to the misuse of digital assets and platforms. But we must also seize this opportunity that comes with digital currencies, payment platforms, e-commerce, youth-driven technology innovation, just like previous speakers have said. We have in Africa, we have a youth population that are very agile, that are very resilient in this. So, public partnerships help us proactively manage this dual dynamics, because there is an opportunity which we must grab, but we must also make sure that the threats that come with the opportunity are addressed. So you can see the common risk that we have seen is trade-based financial crime and smuggling. By trade-based, we have seen how people use trade to launder money, to finance terrorism, to also commit a lot of other fraudulent activities. We have also seen a high increase of cyber-enabled financial crimes. The opportunity here is the AFCFTA, driven regional integration, is an opportunity. Digital financial services and e-commerce is an opportunity. And also growing fintech and RegTech ecosystem within the continent is an opportunity. How do we bridge the gaps that we expect in private partnership in financial intelligence? Traditionally, we all know that public institutions like FIU, central bank, law enforcement agencies have always operated in silos, sometimes reactive and often constrained by access to timely data and most especially quality one. Meanwhile, on the other side, the private sector actors like banks, fintechs, telecoms, virtual asset providers poses a vast database and cutting-edge technology. But the challenge is that they are usually unsure on how to contribute to national security and IT financial crime framework beyond basic reporting. So, for us to bridge this disconnect, which is a must, therefore, the idea of public-private partnership in financial intelligence is not just about cooperation, it's about building a shared ecosystem and trust and capability, ecosystem of trust and capability. So at the FIU, we are not taking it as a theory. We have reached out, and that is the model we are doing. You can see even this week, we have sent letters to FinTech, to CBAN, and a lot of stakeholders on different PPPs. We have had a partnership with London Exchange Group on PPPs we had in October last year. And also, even with RegTech, we did have a partnership last year. We had a very robust meeting, and we have strategized. So at the FIU, we are looking out to see how do we reach out, because there is a lot of opportunities and that we can do together, working together. We have seen how this has really helped us in what we do. Now, the RegTech opportunity. Regulatory technology is Africa's opportunity to leapfrog the legacy financial system and build an agile, intelligence-led compliance framework. The cost of compliance is rising. Yes, we all understand. But the cost of non-compliance in the form of illicit financial flows, regulatory sanctions, and reputational damage is far higher than the cost you will pay in compliance. RegTech offers a powerful path forward. It will surely help both public and private sector actors to dictate, prevent, and respond to financial crimes with speed, scale, and precision. Because the reality is that the bad guys are moving with the speed of light. But we that are supposed to provide the response, we are moving with snail speed. So that is the challenge we have here. Therefore, we must embrace PPP and regulatory technology. For African economies, RegTech is not just a matter of compliance efficiency. It's the pathway to lower the cost of financial intermediation, safer cross-border transactions, stronger investor confidence. So, what are the key pillars? We are talking about having a real-time risk monitoring. We should also think of enhanced due diligence, KYC, and know your customer business, identity verification. It's high time we have a shared facility. There is a project we started with Central Bank and the financial institutions about a shared KYC facility, which for now has been on hold. That is something that we need to work on to make sure that we have, because disparate data that existed is also causing challenges. Then there is also need for blockchain and digital asset analytics. There is also private preserving data sharing. This is very key because the fraud continues to trend. because people don't share data. Everybody keeps things to themselves. That is why a fraudster can develop something to hit one bank and will succeed in hitting about 20 banks at the same time and successively, because we don't share data. Now, regulatory reporting automation, which is something that is key to RegTech, and compliance inclusion of micro and small, medium-scale companies or fintechs. So, call to action. All of us have our own stake. For government, we should realize that government institutions must institutionalize PPTs, not just in policy, but in practice. It is a good thing to, in Nigeria we are very good at having policies, but practice is the challenge. The private sector must also step up, not only to comply by just making sure you are fulfilling the righteousness, but to co-develop the tools that protect our systems. Our regional bodies must also harmonize regulatory approaches to enable seamless cooperation across borders. This is a call for collective leadership from everybody. So for governments, there is need to institutionalize PPP framework for AML, CFT, and IFF control. And for private sector, there is need to embrace responsible innovation. Why we always add the responsible, innovation is something that we all like, but the innovation that will be disruptive is what is challenging. So, and there is also need to co-develop compliance technology. For regional bodies that are within our continent, there is need to harmonize standards and enhance cross-border regulatory cooperation, because this is what they do. Like now, for instance, if you see the global crypto adoption index, Nigeria is number 2. But I can tell you as a technology person, most of those transactions are not done by Nigerians. Because of the loopholes in their own system, people use Nigeria as a launch pad. Somebody can be sitting as far back as El Salvador. Last month I was in El Salvador for a Digital Access Summit. That's what I told them. I said we see footprint of people from Central and North America hitting Nigeria because they are using Nigeria as a conduit. So that is why there is need for us to standardize regulation. And looking ahead, Africa must transition from reactive approaches to proactive, intelligence-driven ecosystem to become a global leader in trusted trade, digital financing, and investment. PPPs are not optional. It's a must. They are foundational to secure our cross-border growth. We share intelligence, share technology, and share responsibility. Africa can unlock unprecedented opportunities. And lastly, in conclusion, I want to reaffirm the commitment of Nigerian Financial Intelligence Unit to working with all stakeholders, that is the regulators, reporting entities, innovators, and development partners, to deepen collaboration, emerging technologies, and public-private synergy. As we innovate, we must anchor our actions on integrity, inclusion, and collaboration. Inclusion, innovation, and integrity must be together. Thank you.
Doctor, the way you said thank you, I wasn't expecting it. Thank you very much. Please, can you put your hands together for him as he goes back to his seat? This is a fantastic presentation. We're glad that this is already ongoing in terms of the partnership. But quickly, ladies and gentlemen, because of time, we want to have a picture session with our keynote presenters. So, Dr. Mohammed, forgive me, I should have just told you to just remain here. But the power of the mic is one that I'll say. Please come back. Mr. Cyril, can you come up? Can we have the CBN speaker? Of course, Ambassador, you want to come up as well. Mr. Iman, please, can you come up? We need to have a picture at this moment so that we can have the keynote speakers all captured as the case might be. Adama can join us virtually. The next item on our program is the first roundtable, which is going to be a panel session. Please, you want to stand in the middle. Why is there no woman amongst you? I guess perhaps we'll look at that some other time. I want to quickly recognize and say a big welcome to the Senior VP Business Development of Flutterwave, Olu Fumilayo Olani in the house. Please, can you put your hands together for her? Please, can you indicate, okay, right, you're welcome up. You're joining us in this next session, and we can be rest assured that our moderator, Madam Tayo Mustafa, is very much on point. All right, gentlemen, can you please smile? Okay, yeah, Mr. Graham, I was looking for you. I'm glad you came. All right, can you please smile? Please smile the RegTech smile. All right. Are we good? Please hold on, I'll have to join this picture. Because I need the ambassador to see that visa is easy now. Okay, did you capture me very well? Thank you. Okay, that is visa one step ahead. Ladies and gentlemen, please can you put your hands together for our keynote presenters? They have done so well. Immediately, at this point in time, I'm going to be introducing the next set of panelists who are going to be making justice to this particular topic. It is cross-border payments and trade facilitation from friction to bridges, tackling transaction costs and infrastructure gaps in cross-border payment through a multi-stakeholder approach. Please, in case you want to have details of each of the panelists and profile, kindly go into the program which is behind you here. There's a QR code. If you've not scanned the agenda, please kindly do that and then explore the platform where you have more details about each of our presenters, including our moderator, who I'm inviting first amongst them all. Please can you put your hands together for Tayo Mustafa, Senior Counsel of Morning Point Incorporated. Please put your hands together for her. She's going to be moderating this session. And myself and her have been deliberating on the best way we're going to take this approach. And make sure that, okay, great. So please come on. Please put your hands together for her. If you clap more for her, she won't trip. Thank you. Please be careful. All right. You want to take where is most comfortable for you, the middle or whichever. Well, ladies and gentlemen, I know some of us are going to be joining us online. I understand Mr. Adama Deakite is joining us. Earlier on, he's made his presentation. But to join her, I would like to invite Mr. Edward Alkin, the Global Head of Public Affairs, the local, to join her upstairs here. Please put your hands together for her. Forgive me for him. All right. And then, of course, I see that Mr. Edward is going to be having a great time. Please, you want to sit in here? Okay. He's going to be having a great time because we have yet another lady that is going to be sitting by his side, and that is Madam Olani Oluwafumilayo Ajoke, Senior Vice President of Business Development at Flutterwave. Please pardon me, I think my lips are running faster than my words. All right, she's going to just take a seat here. Thank you. I just want to confirm if Christian Jacob, Senior FinTech Specialist at Deal, is here in the house. Oh, fantastic. Please, can you please put your hands together for him as he comes up to join the panelists. They are going to be speaking. Lately, you want to have a seat here. And I guess that the next persons are going to be joining us online virtually, and that is our very good friend, founder, CEO of Alliance of Digital Finance Association, in the person of Sarah Coley. Sarah, it's good to see you. If we can just acknowledge your voices, and all of you who are joining us virtually, please let's acknowledge your voice by saying hi to us so that we are sure that we have you on ground. Of course, Timothy Were is going to be joining us as well, Director of ICT at State Department of Trade, Kenya's Ministry of ICT. Great. So can we hear your voices? Good morning, Sarah. Good morning, Adama. And good morning. How do you pronounce the word? Is it Were, or, I don't want to use the other word because in Nigeria here, W-E-R-E sounds very unique. All right, so let us know how we can have those words pronounced. So we'll just stick with Timothy, as the case might be. Over to you right now, Tayo. Just as we've agreed, if we need to call ourselves our attention, we'll just clip on. Okay, I'll just give you this.
Hi everyone, good afternoon, and welcome to a really important conversation that sits at the heart of Africa's economic future. I'm really happy to have everyone here today, and thank you for listening in. So, as he's already mentioned, our focus today is on cross-border trade and payment facilitation, but we will be focusing on answering the question, how do we tackle transaction costs and infrastructure gaps through a multi-stakeholder approach? As we know, the vision of a truly integrated African cross-border payment space is one that is compelling. You know, seamless trade, faster trades, compatible infrastructure, but this vision is constrained by a number of complexities, a number of factors such as high transaction cost, slow-moving coordination. So the essence of this panel and our discussion today is how to answer that question. How do we tackle this high transaction cost? How do we improve in terms of the infrastructural gaps, which a number of speakers before us have already highlighted? So I'll just go into, let's just dive into it. Thank you for doing the introduction. That's my next point. So, as we know, friction, it kind of appears to be a blanket term, and depending on where you sit, friction looks like different things. To a regulator, it looks like one thing. To a policy maker, it looks like another thing. And to a fintech operator, it means different things to different persons, depending on where you sit. So I just like for us to kick off this conversation by tackling the pain points or the pressure points where friction is most acute. I'm not sure I can see Timothy, but I'd love to kick off with Timothy. Timothy, can you just let us know if you can hear us? No?
Please can we confirm if Timothy is online?
Okay, so far, no Timothy. Well, I guess I'll just throw it across the panel. I'll throw it across the panel, and let's just kick off with Ed, because you're closest to me. I'm so sorry, Ed. But in our cross-border payment space, I want to get your perspective. Where do you see friction showing up most severely? What are those pain points that simply cannot be ignored any longer?
Thanks, Teo, and it's an absolute honor and a pleasure to be here in Lagos, and thank you for the very warm welcome. I think from a private sector perspective, I think friction to us often comes in the form that there can be a sense that regulators create friction for the private sector, that they inhibit the freedom of operations and movement that we want to have. We want to create. We want to we want to be to design and build around frictions, and we see I think it's a common misconception that regulators are part of that friction for the private sector. I think the more time I spend with regulators and the more time I spend thinking about the environment that we
that landscape where you have operators working across multiple jurisdictions, how do you see fragmented policies and a lack of shared regulatory framework impacting compliance? Yeah, okay.
Excellent. Okay. So in response to the question, I think one of the things, that those fragmenting policies and, shared, not having shared regulatory frameworks, it makes a fintech that might be operating, say, in Nigeria, it makes it more difficult for them to expand to, say, Benin or, say, Ghana. Moving and scaling to new jurisdictions will require different governance requirements and therefore different compliance requirements. So it means not only has the fintech got to understand all these different regulatory frameworks and the changes to them, but also potentially change their processes or what they report or how they report it. So sort of data protection, AML, CFT, different ways of doing things can make it much more expensive for the fintech. Another good example of this is things like cloud computing. So we did a report last year on this, looking at cloud computing in Africa, and the different regulations and sort of laws, particularly around data localization, data sovereignty, means that some fintechs were able to use cloud computing in some jurisdictions and not in others. And so that then means, being able to scale to countries where cloud computing is maybe not allowed to be used or not allowed to be used in the same way as another, can mean, requirements for building different infrastructure. And all of these things cost more money. And, ultimately, fintechs, especially in the early stage of their, they're trying to sort of build up and scale, things need to be done cost effectively, cost efficiently, so that they can build these business models. And also bear in mind as well, fintechs are often trying to reach the underserved consumer. So the price point at which they deliver their products and services needs to be low. And all these different burdens from compliance and needing to sort of restructure and, jurisdictions will all impact, the cost of those services also going up to the end user as well. So, the disharmonization is really causing issues with fintechs themselves and their scalable business models, but also the innovation and the financial inclusion, which is really, really needed too.
Thank you so much. That was absolutely great. One of the things that stood out to me, you mentioned a number of important points, but one of the things you did mention was that there is a need. What leads to higher costs is the need to have material infrastructure for several players in the industry. And for me, I just want to come to you quickly in terms of what infrastructure gaps and given your experience in the payment space, what infrastructure gaps have really stood out, and how do you see us urgently addressing those gaps?
Good morning, everyone, and thank you very much to the organizers for inviting Flutterwave to this platform. I think this is a reality because just last week, FXC listed Flutterwave as one of the 100 companies that are doing cross-border payments and doing it well. And so when we saw the theme of today's event, we thought it was the best time to discuss how we've been faced with different issues, including the infrastructure that you have mentioned. In Africa, I always see this thing as we're not being competitive, we're collaborating. And if you see that, it's a bigger picture to understand that African countries need to come together, to collaborate, to have strategic partnership in a way that we are seeing ourselves as a global village, a global hub where we need to work together. So imagine, and it's so sad that the regulators have left here because I would have been happy if they are listening to us right now. When you have the regulatory dynamics in a way that one license can help you market or do transactions across Africa, then it makes the world a better place. But I'm going to Ghana today and have to take a different license. I'm going to Senegal, I'm going here and there. So those are the issues that we're being faced with. But it is the reality. But thanks to RegTech, you can take back the communicate to them to understand that Africa needs to come together, even if it's ECOWAS, which is the West African countries, then we have the East African countries come together with one license that can make people work seamlessly. Even the SMEs, whatever type of business you're running, you can actually you can scale globally with a license, or perhaps 2-3 licenses. Then the other part that I would like to mention is, in terms of having policies, there are different policies, and I listened to the NFIA man talking about different policies, and in Nigeria we have rules, we have laws, we have regulations that guide the operations of our businesses. But imagine you being a fintech and you have different licenses that you have to do one transaction, but perhaps mobile money or e-transfer or whatever it is. So we need to, it's a clarion call to the regulators also, and also to the policymakers, business experts here. Yeah, he's my client, the local. So, I mean, we can talk to them to understand that we need to work together to make this fintech company succeed, and not having different people come to you at different times. Yes, those are the issues that we're being faced with. We are trying to manage it with the regulators, and with collaborations and partnership, I believe that we can scale seamlessly. Thanks.
Wonderful. Thank you so much for me. So now we have a grounded sense, prior to this, a number of speakers have highlighted enough the friction and here and there. Now that we have a grounded sense of where that friction lies, I want us to take a step back and look at regional frameworks. An example would be PAPS, and then we've seen African Continental Trade Free Area. Adama, could you please confirm if you can hear us, just because I'm coming to you soon?
I can hear you, Telugu.
Wonderful.
Unfortunately, my camera cannot be on.
It's fine. We'll make you.
Yeah, but I'm hearing you very well.
Okay. So wonderful.
I can tell you funny that the regulator are here. We are listening to them.
Okay. Wish we had ours, but it's fine. So we've seen commitments on paper, and I'm so glad during your presentation you highlighted PAPS, and you also highlighted some of the initiatives that WAMI would be rolling out or has rolled out. But I do want to, I feel like I need to get your perspective, and in your experience, how far have these initiatives really come in, harmonizing regulatory cross-border transactions and payments as such? Are we making real progress, or are we still seeing high-level agreements being made, negotiations here and there? Are we making progress?
Yeah, thank you very much. I think we are making real progress. If you take the PAPS now, since the inception of PAPS and what we have today, we have made a tremendous progress, because PAPS was only at the beginning was only designed for WAMS countries. It's not all the West African countries, only for the 6 number for WAMS countries. But today, PAMS has become even global, because it has even moved beyond Africa. It has gone to Caribbean region. So we are making a progress. And now most of the central bank and commercial banks in Africa are using PAPS for their daily transaction. 5 or 10 years ago, that was unimaginable in Africa to transact cross-border, to do cross-border transaction without using a measured currency. But today we can transact without using a measured currency. This is one of the big success as a regulator, a policy maker, we have been making, and we are continuing to work to harmonize our framework. Many, like if you take Africa, there's a lot of harmonization of trade policy, and so most of the trade barriers are going to be removed, even though I think is really in Africa side, there's a lot of negotiation, there's a lot of high political discussion and low implementation. I can confess that. But at PAPS level, we are not longer at the policy or negotiation. We are at the implementation level, and we learn from feedback. We learn from what we hear from the market players, from businesses, and we improve the process. Because up to now, WAMI continue to work with PAPS to hear about the feedback from commercial bank, from the users, and see how PAPS can improve. One of the things we discussed with PAPS, which is very interesting, like right now, this big company in Africa, like if you take Dangote in Nigeria, who is doing business in Ethiopia, and Ethiopia Airline, who is African Pan-African airplane, is operating in Nigeria. But sometimes their money is caught in from Ethiopia, they cannot repatriate their profit or their money in dollar, and the same for Dangote, cannot repatriate his money from Ethiopia. So now with the PAPS, business, they don't need to get the approval from to repatriate all these their money in country in major currency. There's a exchange between marketplace, like between the big businesses in Africa in their local currency, and the transaction will be done between the central bank. It is a big achievement. Maybe people don't know it, but it's really helping business in Africa not to only try to be caught in the regulatory and policy process, and try to smooth their business for them. So I think there's a lot of to be done, to recognize, to be honest, in policy and regulatory side. There are a lot of to be done, but there are a lot of have been done too. So that is what I want to share with you today. Thank you.
Thank you for that, Lionel. So, Ed, I'll come to you because still on, PAPS, harmonization, all of this. I want to get your insight from, because we've had the public sector, we've had the regulatory side. So I want to get your insights from a private sector perspective. Is full harmonization with all of these initiatives in place and more of them still being rolled out? Is it possible? Is it achievable? Or are we still too far apart in terms of infrastructure and regulation?
Thanks, Tayo. We're huge supporters of the harmonization and interoperability of payment systems across Africa, across the whole globe. I think from dLocal's perspective and fintechs like us, what we have done is we have created systems that actually circumvent the complexity and the expense of the traditional financial systems, which perhaps is part of the consolidation and interoperability of these sort of legacy systems. But what we do is we effectively simplify the complexity for international merchants and allow them to connect to all these local payment methods that people across Africa want to use. And I think what we're probably going to see from the private sector's perspective is probably more fragmentation, actually. Whilst the traditional financial institutions try to consolidate and create less friction for transfers of money between them, the fintechs who are already making this seamless and making this, moving outside of these traditional financial institutions, I think are going to want to protect their share of wallet, and you're going to see more fragmentation from the fintechs. But I think what we really want to see, and what I think will benefit both the fintechs and the traditional financial institutions, is the regulatory frameworks that all of this innovation can work within, whether it's the fintechs, whether it's the traditional financial institutions. And I think that needs the trust and collaboration. But there's also huge opportunity. I think if I go back to the original question you asked about frictions, I actually see I see it more as an opportunity rather than infrastructure infrastructure gaps. I see it as infrastructure opportunity. All across Africa, You're seeing technology leapfrogging traditional methods of banking, for example, and now mobile banking across Africa is a huge success story. I think the sort of infrastructure that we're talking about that facilitates a lot of the payments that we want to see reducing cost are things like the digital IDs that here in Nigeria, the NIBS system, which is partly sponsored by the Central Bank of Nigeria, I think is a wonderful system where you have a digital ID card being developed, in conjunction with a payment card, and these sort of technology allows this. Technology allows us to use and to be able to use technology to lower costs, but also increase and improve security and compliance in what we're doing. And I think there's huge opportunity here using technology to do that.
Thank you so much. Christian, I'll just come to you. So Ed highlighted a number of points, and one of them was the continued existence of fragmentation. As much as efforts are being made in terms of this regional frameworks, there's still that fragmentation. So I want to, still on the private sector perspective, and your work in global workforce at Deal, I want to know, are you experiencing this similar friction, this similar hurdles, and what do you think are those strategies that can be adopted to make sure we accelerate the adoption of these frameworks more quickly?
Hi, good morning. So, talking about the hurdles, I think one of the biggest ones, from my perspective, is political will. Basically, you still have ministries of commerce, ministries of finance that feel like PAPS is still optional. You have people from central banks who feel like fully adopting PAPS means they're basically losing control of their monetary policy. So there is that political commitment gap missing there. So in cases like that, personally, I think we need to make more moves there. If you're going to go for AFC, FTA, trade conversations, perhaps voting deadline should be something that we should push for there, so that if you want to make these conversations, you need to at least onboard PAPS. Another thing is the institutional side of it, where we have CBN as well. Well, not CBN, but we have central banks that worry about FX liquidity and settlement timelines, which are valid issues as well. But again, we have the African currency marketplace in PAPS, which should be coming on board, so that hopefully that should fix it. So these are quick wins that we need to push for. And then talking about the technical side of it, there are frictions everywhere. From the KYC, slow KYC exchanges, looking at the ISO 222, the messaging is not consistent. We also have issues where, again, like people are not sure what exactly to implement, because there's no one guideline on how to implement the API. So in cases like this, personally, I think one quick win there would be to just implement an open PAPS to ISO 222 guideline where everyone knows this is how you implement it. Another important thing there is we also need at least a KYC utility, a cross-continental KYC utility, where we know that KYC there is a utility that everybody can tap into, and then via API, and then it just works smooth. So those are quick wins that we can move along with. The bottom line from my perspective is that the technical rules are there. We just need the policy alignment and risk comforts to align, and then the hurdles should at least reduce.
Thank you so much. Thank you. I think wonderful insights so far. We've been able to pretty much establish where the pain points are, where the friction points are, but now I want to bring it to one aspect that I think is a persistent barrier in the payment space. And Timothy, I noticed you've joined us, so thank you, and just confirming you can hear us. All right.
Yeah, good afternoon. Yes, I can hear you. Sorry, I had some challenges, but I'm here now. Thank you.
Thank you for joining us. So yes, one of the most persistent barriers in the payment space, and that would be costs, specifically transaction costs. And we see that despite innovations, despite attempts at good attempts nonetheless, attempts at regulatory reforms, regulatory harmonization, transaction costs in the Africa payment space still remains exceedingly high, excessively high, if not. So Sarah, I just want to bring you in here. With all of these reforms, with all of the newer platforms, innovations, in your view, what practical strategies can stakeholders begin to implement to bring down this cost and, ease doing business in Africa?
Well, I think when I look at a lot of our members, it's no surprise that actually so many of the members are fintechs in the payment space. Certainly, whilst we haven't always had an answer to this, what's been amazing is actually people have just gone ahead and innovated and started to develop more affordable cross-border transactions that we are seeing from multiple fintechs across the country. So I think, I would encourage the innovation angle and the continuous innovation, but also the collaboration. So there are a number of entities that exist already. If you can collaborate with them rather than having to recreate what they have done from scratch, that's going to save, save time and cost. So, you don't have to do everything yourself. Find a partner or bring multiple partners into an ecosystem that can create something that is more cost effective for you as a stakeholder. But I think it is very difficult. We've obviously got the use of technology, and technology certainly where it can be used can make things cheaper, easier and more efficient. But this is where I think, and obviously, I'm from the Alliance of Digital Finance and Fintech Associations, so associations are really important to me and at the heart of what I do. And I think that's where associations are really important, because for me there's not enough dialogue and engagement. There's not that private-public sector conversation that happens, and there's not always a clear voice of the industry that sort of shapes what they want, what they need to be able to access some of these ecosystems and systems. So I think more joint advocacy is required. Implementation and supporting the things like tiered KYC and risk-based approaches is important. Being able to have fintechs to use and access national payment systems and things such as PAPs. And also we have really strong development of a lot of open source related to payment rails and protocols, things like Mojo and Intellectual Protocol. I would really encourage people to sort of try and make sure as a fintech that they are ready to be able to access and use these systems once they're enabled to access them. But very importantly, be a voice. If it isn't a fintech association in your jurisdiction, form one. If there is one, join them and strengthen the voice that you have to be able to shape these systems, these payment systems, and be an active partner and actor.
Great. Thank you so much. There's a point you mentioned in there about collaboration. I'll come back to that later, but still, because we're talking about transaction cost here. Being in private sector myself, I've seen how this has played out and impacted things moving seamlessly. So I still want to get private sector perspective on this. So coming to you, Ed, what strategies, even in addition to what Sarah has set out, what strategies do you think would be useful in reducing costs from your perspective, given your work at the local? What do you think, whether it's the government, the regulators, policy, what needs to come into play?
Just say again, can you just repeat that question so I can fully understand?
No problem. So what strategies do you think need to come into play in order to reduce transaction costs and maximize benefits?
Sure. I think there are a lot of things that could be done. I think from our perspective in particular, I think that the FX is a large part of our costs, and finding ways to reduce that is part of the service that we offer to our clients. It's why we partner with wonderful partners in country. Shout out to Flutterwave for the wonderful service that they give to us. So from our perspective, it's really about, from a private sector perspective, it's about partnering locally. I think structurally, infrastructure, regulations, there's always more that can be done. But for us and the way we deal with this, it's about making sure we have the right local partners who understand the market, understand how costs can be lowered, have the relationships with the banks, have the relationships with the local partners who can do things efficiently. I think that's probably my key point.
Thank you. For me, I also like to get your perspective on this. Is cost an issue for you? I know it is for me. I know it is for Ed. And so, is this also an issue that you seem to be seeing? And are there any other disconnects or other strategies you think we could implement to breach those gaps here and there?
Always have to do this. Okay, thank you very much. I don't think there's anyone seated here that don't have a problem of cost. I'm an accountant and I know what it means to make profits. So you have to cut your costs. And there are lots of costs that Nigeria can impose on you or Africa can impose on you. I see the power, the energy will be one constraint, but of course some of us have gone off grid, so we're managing that seamlessly. Are we on the same page? And there are also opportunities for people to work remotely. So in that way, you're cutting costs of infrastructure, which is the building. But I would say, like he has mentioned, if you can partner correctly with the banks and also with CBN or other people that can provide the best FX for you to run your business, that would help a great deal. There are a lot of things that you can use in cutting costs, right? But that does not include employment costs. So you have to employ the right set of people to do great jobs for you. So that is not one of them. But of course, all of these things that Nigeria has imposed, or perhaps Africa has imposed on us, we must be able to get the right expert to advise us when it comes to having the right auditor or financial accountant to help you see through your books, to know what you should cut out. In Flutterwave, our strategy this year is cutting costs. And that includes things that are not relevant for the business. Some people spend so much on adverts and all of that. You are already there sometimes. You don't need much of that. But of course, you can put in that fund into developing the business and also creating a better infrastructure that can help you competitive abroad and even globally. I believe that those are the ways that we're able to cut costs.
Thank you so much. Thank you. It's times like this I wish the regulator was sitting with us, someone from the central bank. Is anyone here? Okay, no? Yeah? Okay, great. All of these great strategies being thrown out. All right. So, because I want to get the public sector's perspective, I don't know if Timothy's still with us. I haven't seen him, so I will. Oh, yeah. Hi, Timothy.
Yes, yeah.
Right. So you've had all of these amazing strategies and suggestions from the private sector. What do you think the role of the government should be, or how can the government come in and help with reducing costs, or just enabling that relationship between the public and the private sector is seamless? It's seamless, but I guess it could be better.
Yes, indeed, it could be better.
Yeah.
The cross-border payments or the payment space in general is closely regulated, and that is the issue where the government has deep involvement. Things move slowly, things tend to be costly, there tends to be a lot of bureaucracy. I think the government's role here should be facilitating. It is indeed true that the private sector moves much faster than the government, and the private sector, being in business, is more interested in ensuring that the payments are done much faster. Part of the problem you've been talking about, the fees that are charged. I think Africa and Sub-Saharan Africa charges about 8.5%, as opposed to a global average of 6.5%. So the government needs to ensure that the services, the fees that are charged are reduced. We need to promote systems like the Pan-African Payment and Settlement System, which operates in local currencies, because part of this cost is usually the conversion, the foreign conversion. If I'm to convert my Kenya shillings into dollars and then convert the dollars into naira, it means I'll be paying more. But if I can do direct Kenya shillings to the naira, then I'll be able to save there. So I think the government is supposed to ensure that systems like the PAPs work and are embraced. The government is supposed to standardize the compliance requirements, so that when you're in one jurisdiction, the requirements in the other jurisdictions are almost the same. Right? And the government is also supposed to ensure that more people can be able to get these financial services. That is more inclusion, so that overall the costs come down as we have more people paying a little to be able to pay for the services. I think initially that's what I would say. Thank you.
Thank you so much. Thank you. So it seems like the government has its strategies, the private sector has its strategies. It's closely aligned, but then something that comes to mind is what Sarah had said earlier, which is that there needs to be collaboration for all of this to come into effect. So Timothy, still, while I have you, are there any, especially in Kenya where you reside and other African spaces where you've worked, are there any systems or mechanisms in place that hasten collaboration or allow for collaboration between the public and private sector to ensure that you're getting whatever feedback they have and then taking that to the table and seeing how you can implement it? Happy to
okay, like in Kenya, there's a concept called public participation, so that before any policy passes, before any law is passed, then the public is involved, and more so the stakeholders in this area. So I think there's been a very vibrant tech community and fintech community, for that matter, in Kenya, and they've been very keen ever since the invention of M-Pesa close to 20 years ago. I think the fintech space has grown, and the central bank feeling left out or feeling maybe. Thank you.
Thank you so much. Sarah, I'll just come back to you. In your experience, just checking if Sarah's here. Oh yeah. In your experience, have you seen any public-private models function effectively to resolve this issue or close the gap in cross-border payment space? And do you think like associations like yours, digital finance associations like yours, are being brought to the table early enough to ensure it's inclusive and that feedback has been implemented?
Yeah, so let me start with the second question. So, no, I really don't think that fintech and the voice of fintech and associations are brought in early enough. I think we're very used to bringing in the voices of banks and sort of your MNOs, but fintechs get left out of that quite often, and they're thought about as sort of a second tier of actors we might allow into payment systems. Which means that some of the little nuances of how they could work, how they could more easily integrate, are lost, and it takes a much longer time, right, to enable the fintechs to be able to be ready to, from a technological perspective themselves, and then being able to allow to be able to be part of these payment systems. I think looking on the continent, one of the really interesting examples where this was different and only happened very recently is in Rwanda. So there's a really great partnership between the public and private sector to launch their new payment system, a new sort of switching system as well. It's using open source technology through Motorloop, and I was really delighted to see that one of the first companies being able to sort of develop products and services to use on that new system was actually Enver, a fintech in Rwanda. So it can be done, and fintechs can be seen as a really important part. And I think a big part of that is, as well as is about looking at your whole ecosystem. And fintechs are much more disparate than banks. So often in banks, there's a handful of them. In some countries, the same with MMOs, MNOs. It's a smaller number, but there can be sometimes an awful lot of fintechs, which is why kind of having that voice joined together by a fintech association, one voice for multiple organisations, can be really helpful and less distracting and easier for regulators to sort of engage with one body as opposed to 30 or 40 people kind of trying to reach out and have a conversation with them. Moving outside of the continent, sort of where else do I see payment systems working really well, where there's sort of public-private engagement and fintech involvement? We have Singapore and Thailand who have their pay now, real-time payment systems that are led by central banks, but other, sort of banks and non-banks are able to participate in that. And I think when we look towards systems like UPI in India and PIX in Brazil, we begin to see, the significant importance actually of having these payment rails that a lot of people can very easily build products or services on top of, because financial acceleration, and particularly reaching more underserved populations, has grown phenomenally in both India and Brazil. Much of that can be accredited towards their payment systems that they've introduced.
Thank you so much. Thank you, Sarah. So I understand from your answer, fintechs are not being brought to the table early enough. Just for me, and I'll start with you before I go to Christian, but is this something you think we have issues with in Nigeria? Are fintechs brought to the table early enough? And when I say early enough, I mean from the regulatory perspective. Are we brought to the table early enough when the policies are being made? Is there some sort of collaboration that ensures that, that feedback is implemented on both sides and both parties are sort of harmonized?
Okay, I see it from a different perspective, because if you have the best relationship with these stakeholders who are governments or even anyone, then they'll call you to the table first. So it depends on how you've been able to collaborate with them. If you're going through challenges, you let them know. You have account officers across the regulatory offices, and they have to be abreast of what you're going through at every point in time. So for example, if CBN is having a function now, they will definitely call Flutterwave, because we pride ourselves as those that function. We bring a lot of revenue to Nigeria. So if you find yourself in that situation where they're one-stop shop for you, you can just call them at any time. They know every single thing that you're doing. Any initiative or infrastructure you want to build, you have called them to the table to discuss with them. Definitely tables will turn around, and then they will see you as the stakeholder they have to be on the table with. And when it comes to PPP arrangements, I think that's just the best thing to happen to anyone. I heard the director, NFI, talking about PPP. It's quite important for us to collaborate. So in Flutterwave, we're collaborating with EFCC. You say, oh, why? Yes, but there's something called database, there's something called cyber security, all those things. So you need all those guys to make it work easy. We are not partnered with NFIU, but there's always a window for everyone to partner with government so that they are seen as the stakeholders that will make you thrive in everything that you do. So I believe in you being there, and they will be there for you at every point in time. And because you generate the revenue that brings about taxation and brings about the revenue in your country, so they will find you as a stakeholder that they need to reckon with at every point in time.
Thank you very much. Christian, I just want to get your perspective. Are you aligned, or do you have a different take in terms of, do you want to repeat the question?
I'm actually aligned.
Oh, you're aligned? Okay, that's good. I'm also aligned. So Ed, I'll come to you. Speaking about policymakers still and regulatory responsiveness, do you think that policymakers could be more agile in responding to innovation without undermining stability, or has that been the case so far?
Thanks, Teo. I'm going to pick up on a few points that have been made already. I think what Sarah was saying about the power of combining the fintech voices and ecosystem, particularly for our central bank partners, is really important. I think, the fintech space is very fragmented. It's also very young, hip, full of cool kids. Not myself, obviously, but my friends here on the panel. And to a central bank, I think that's often quite unsettling. The central banks have traditionally, they've known all the business, all the traditional financial infrastructure and banking partners, and that's been the way it has been for a long time. And I think a bunch of kids turning up wearing trainers and t-shirts, they might come from some of the biggest fintech players in the world, but to a central bank, that's sort of, they don't, that's not what they're used to. And so I think combining the voices so that the central banks can really recognize that there is a unified voice and that the points that are being made are relevant is very important. And therefore we hugely endorse, and we, wherever possible, work through the fintech associations to raise our voices and our concerns and our aspirations to central banks. I think one of the things I see around the world, working with our central banking partners across the globe, is access to those central banks is it's very hit and miss. In some jurisdictions it's very easy, in some jurisdictions it's very hard. I think we really endorse and encourage things like the regulatory sandboxes as best practice, and being able to get access to those and to be able to operate openly and in a way that allows central banks, as I was explaining earlier, the onus of explaining the technology is actually on the fintechs, on the startups, and ensuring that the regulators are comfortable and understand it. Because if that is the case, then we will create the infrastructure and the environment for us to flourish. But it really requires that maturity from the private sector to say, we understand that we are different, we understand that we are maybe uncomfortable because we are disruptors, and central banks don't like disruption, but to be able to say, to be hugely transparent and say, this is what we do, we want you to understand it, we want you to see that the benefits that it brings, the lower costs of transactions, the financial inclusivity that fintech provides, from a dLocal perspective, to be able to offer access to the global digital economy to those who do not have the international credit or debit cards, means that 80% of the population now can access the global digital economy that they were not able to do beforehand, because beforehand you could only access it using an international debit or credit card. But now you can pay through your local e-money in Kenya, or your digital wallets in West Africa. And that's a beautiful thing. So making sure that the fintechs explain this is the value proposition, it really is hugely beneficial to the people, to the consumers that you are serving and protecting, rightly protecting. And here is our open book. Please understand us and work with us, because we don't want to be working in the grey space in regulation and in a regulatory framework that was designed for the traditional financial institutions. We want a regulatory framework that really fits what we do, so that you can be comfortable with what we're doing and everyone can win.
Thank you so much. We've heard so many great perspectives today. I'm getting some eyes, so clearly we've been eating into other times. So I'm just going to, as we begin to wrap up, I want to throw this question across the panel. Fumi, I'd love to start with you. So if we were to truly achieve a pan-African, ecosystem, truly integrated, the whole vision we have, seamless trade, compatible infrastructure. What does that look like to you? How do you see that coming into play? What does that look like to you?
All right, thank you. You know, when we think of Africa, we think of about 40 currencies, and we're thinking of having licenses in 54 countries. So my advice, or what I'll take out from here is, we're not just going to sit here and talk the talk and not do the do, right? So as Africans, and I know we have the ones that are outside of Nigeria here, and listening all across.
Can I be an honorary Nigerian, just for the day?
Oh, yes, yes. We can give you the what makes you a Nigerian, yes. All right, so what we need to do is to have that collaboration. I've heard it on different platforms here, saying collaborate, collaborate, collaborate. So if I need currency, I'm in South Africa, I need rand. I don't need to change the rand. That's why we have the cross-border, seamless cross-border payments functioning well for us. And I believe that if we can come together as Africans and also let the world, the European countries and every one of them see that we're working together. And I'm in West Africa. I have the ECOWAS license that makes me work across the West African countries. And I have the East African for the East African countries, I have a certificate or license that makes me work across. And CBN, across all these African countries, would recognize that documents that you have, the regulatory document that makes you function. I think it's going to be a better place for us. And we'll not have SMEs and MSMEs struggling to transact globally. It's difficult because we're seated here and perhaps we have the name. So it's easy for you to think that you want to transact across the world. But there's some small companies that are just startups. They're trying to see how they can take their goods outside of Nigeria or even transact or do some transactions in any way outside of Nigeria. So I believe that we need to continue to preach this collaboration. We need to continue to talk about how there's no fraud in African country. We have the AI detection to actually know when to stop. I've been seeing that thing. It's been smiling in my face when they say built to stop fraud, trained to stop it. Yes. So I believe that we can do that to have the trust of these people, even trust in government, trust in the companies that want to come in, ease of doing business like you've been mentioning all through the conversation. So I believe that we can speak the language of trust. We can let people know that, yes, in Nigeria, when you come here, it's easy transaction across Africa and across the world. So that's what we preach here. Cross-border transaction is seamless and we can make it work.
Thank you, Fumi. That was absolutely wonderful. I would love to go around to each person and gain their perspectives, but someone's looking at me. So, all right, I'm just going to come into the audience. I'm pretty sure that some of you have questions, hopefully. So we could take one or two questions.
One or two. I have one here for you. I have two. I have three. That will be all for now. All right, can we get the microphone over to? Can we have an extra mic? None at all. Okay. Favor, please, can you come? You use this microphone to. That's Madam and the gentleman there. Before she goes ahead to ask her question, okay, Madam, you go ahead. Ask your question, then I'll ask Tayo, the one that's here.
Mine is a comment and not a question. Let me start by saying thank you to the organizers. Panelist night one, thank you for your insight. My name is Monserrat Vincent, Director Strategy and Innovation, CBN. So Fumi, when you're asking that question, the story CBN has left. No, we're in the room. We're listening, we're collaborating, we're engaging. And for us at the CBN, we're being very deliberate about a number of things. One, it's good to know that both the private sector and the CBN are on the same page about cross-border payment, no doubt about that. And then when the gentleman mentioned the issue of some central bank being uncomfortable with Pan-African payment, he wasn't referring to CBN. I'm sure you were not referring to CBN. So it's important to let people know that when he hears central bank, it doesn't mean central bank of Nigeria alone. We need to put that across. We're very big on Pan-African payment system. We're pushing the narration. In terms of innovation, CBN is also very, very deliberate about that. We brought innovation to enterprise level. I sit on top of that. We're engaging with the industry. And so even when Fumi said, you asked the question about if fintechs are brought on the table very early, And she was like, look how we speak, they make money for the economy, so we bring them up. Not wrong, but not entirely right. So for CBN, every license institution has a relationship manager. We're very deliberate about institutions. So even if you are not yet there, you're not making that money for us, we have our eyes on you. Guess what? After listening to them at the CBN, where your MD was also part of the finance, we have the governor commit to having a financial system innovation center. What are we saying? We're being very deliberate. We're not just going to be reactive as CBN. We're going to start leading the having conversations. That's why we're here. So we're very much in the room. We're listening, we're engaging. Thank you.
Thank you.
Wow. With this sense of people in CBN, you can go to bed with your eyes closed. This is fantastic. They were listening, you better be, okay. Quickly, next question behind you.
Hello, good afternoon, everyone.
Sorry, are you from CBN? Okay, no, you're not.
No, I'm not. My name is Chinezi Ochiolo from Foreign Investment Network, FIN. I actually heard a number of comments concerning how to make, cross-border payments faster and easier across, the countries in Africa. And I think one thing struck me and it stood out for me, and that's what I want to talk about. I will make a kind of brief comment and ask a question, and that is the issue of political will. So when we talk about political will, I know that collaboration, some people mentioned collaboration, among the fintech companies and other players in the sector. That's very important. And this collaboration is not about in-country collaboration. It can also be cross-border. Imagine people in Nigeria, Kenya, South Africa, and other parts of other countries in Africa saying, okay, we want this policy to be implemented. Another side of it is to have a standard. When you want to go cross-border, there should be standardization. If, for example, we have things like KYC, for example, for the fintech, and you are implementing KYC across various countries, that is the standard for you to be a customer and operate so and so accounts with us, and you are now pushing this collaboration across the borders. You're asking for political will. Then I think the political leaders can listen. Then I want to ask, are there moves you are making already? So maybe there was a conference that held in Ivory Coast that brought about 5 presidents together. And you know that once these presidents approve something, they are going to give the ministers in charge directives to implement. Are you making moves to bring these high-level players, like maybe presidents, maybe ministers on board, put some of these structures you have, your collaboration across border, your standardization, so they can do something about it? Thank you.
Thank you. Interestingly enough, we have the technical advisor to the president in the House on economic matters. I think he just stepped out, so we have that represented. A question for you, Tayo. Somebody sent us in and said, given your extensive experience advertising fintechs like MoneyPoint on regulatory compliance across the UK and Nigeria, what are the most significant operational bottlenecks or data collection challenges you typically encounter when managing KYC/CDD and traction mentoring for cross-border payments between 2 corridors? Where do current solutions fall short? I hope you got that. I could send that to you directly.
No, it's fine.
All right, so we're going to wrap up this session in the next 3 minutes with all of the response. Thank you.
Okay, thank you. So in my experience working in MoneyPoint and across these varied industries where we are varying jurisdictions where we're scaling, in terms of operational bottlenecks, it would be the different, like we've highlighted several times, this fragmented regulatory policies, fragmented lack of shared regulatory frameworks across these jurisdictions. Being a lawyer myself, that one tends to give me a bit of headaches because you're going into the UK and there's an entirely different licensing and regulatory framework over there. You're going into Kenya, especially when you're going across different borders in Africa. We have several countries and neither one of them have like a common system or common framework of laws. So it's for me that's pretty much like the major hurdle is getting all of those laws on the table and trying to see what licenses do I need here. I can apply my license here in Nigeria to when I go to Kenya. I can apply my license when I get to South Africa. I need to understand each of these frameworks before I dive in. And the other aspect was data collection. Still, it comes down to the differences in the legal framework. differences in data collection laws. If I'm going to the UK, I have to be looking at the GDPR. If I come to Nigeria, I have to be looking at the NDPA. It's all different things across board. Even when you're dealing with like transfer of data from, especially in cross-border payments, when you're dealing with transactions from Nigeria to the UK, you have to deal with how you're handling customer data, how you're processing customer data. All of these things are very tricky, and at the same time we're trying our best here and there to be cautious in how we approach these matters while again engaging with the regulators. We try to do that. One of the solutions that we aim for early on is that early onset regulatory engagement and having legal counsel across different borders to make sure we have all of those policies in place. Thank
you. Okay, that's about the response from her. I think we'll just use one more comment each from the panelists to wrap up the session, and then we have a photo and get ready for the next. Over to you, Tayo.
All right, thank you. I actually was going to, before we close, I was going to ask Adama and Timothy because they're also on the public sector side, and we've been looking at Central Bank of Nigeria, but really we have central banks everywhere. So I just wanted to get your perspective, Timothy, because I see you first. I'm just going to get your perspective on, on the private sector. We've seen what a truly integrated African ecosystem would look like. But for you, in the public sector, as a regulator, what does that look like for you?
Okay, thank you very much. I think, as you said, the central banks always lag, because the innovations come in fast and furious. But I think the place of fintechs is now cemented in the banking system. And so central banks are trying to work with them. It's just that central banks have their laws, they have their policies, which take time to modify or to amend. But from where I sit, if you are to have a truly Pan-African experience in terms of payments, then it needs to come from the top. And we need to lobby the African Continental Free Trade Area and the AU to be able to give us regulations that are acceptable, that the different delegates will work on and agree that this is what we'd like for Africa. Then this can be implemented through the regs, and in due time, we will have a single system continental-wide. Thank you.
Thank you so much. Thank you. You just highlighted what I intend to close out, which is it's not just about innovation. As we've said time and time again, it's about collaboration. Regulators, innovators, policymakers, we all need to come together, and time again, we're seeing those mechanisms in place to ensure that feedback is received and implemented. Thank you so much to our wonderful panelists. Thank you to everyone who listened to us today, and thank you.
Thank you, Tayo. Please can you put your hands together for them? As they all come up to have the panelists photoshopped, so that can we have Mr. Cyril to join them? Okay, and then it's all right. Quickly, we're going to move into the next session, but I'd like to quickly recognize the presence of Mr. Dr. Adekunle, the Chief Operating Officer of OPE, Nigeria. Thank you very much. Please put your hands together for him. Photographer, can we have you guys? Where's the photographer? All right, you want to come up front so that we're able to capture that. And of course, my very good friend also walked in, and that is the chairman of CB, and of course the Chief Partnership and Ecosystems Officer at Wema Bank, Mr. Ajibade Laolu Adewale. Please can you put your hands together for him? You're welcome. CB is one of our partners, as a matter of fact, and of course we have several others in the house. Next in line, ladies and gentlemen, I really want to confirm if I have my other panelists on queue, because after the presentation by the President, Ghana FinTech and Payment Association, we're moving into the roundtable track on consumer protection. I just want to confirm if Mr. Ada, is it Mr. or Mrs.? I'm not too sure now. Ada Isamade, Head of Legal Units of the Nigerian Data Protection Commission, is the person in here, please? I need to confirm that. Okay, can I also confirm the presence of Miss Freda Bruce Bennett? I'm very sure, yes, I'm very sure you were in the house. It's good to see you. And of course, Chinedu Ehamneze, country manager of Jumo, is in the house. Oh, fantastic. It's good to have you here. And then Dr. Chinyere Tomineke is of course she's in the house as usual. Thank you so very much. Ladies and gentlemen, quickly I would like to introduce the next speaker who is speaking on building digital trust through storytelling, an innovative model for cybercrime education in a complex technological era. And that's the person of Mr. Martin Kwame Awaga, President of Ghana FinTech and Payments Association. Please put your hands together for him as he comes up to make his presentation.
Good afternoon, everyone. Yes, so my name is Martin, and I bring you greetings from Accra, Ghana, where Ghana and Nigeria are basically like 5 and 6. So it's on many fronts, especially on the front of Jollof. Yeah, that's just by the way. But I think we're not here to discuss Jollof. We are here on important matters. And I'm going to be doing a brief presentation. Bear with me. I have about 15 minutes to finish this presentation. And it's basically about building digital trust, particularly in our current dispensation, which is the digital economy. So one of the things that we can all have alluded to is the fact that there's a lot of complexities when it comes to the emerging technologies as we have it today, and it's causing a lot of issues, particularly Nigeria here, where we are seeing a lot of fraudulent activities in the digital financial space when it comes to digital financial services. And so, to start with, yes, so before I start, I would like to pick your mind on a few things. Bear with me, it's 10 minutes and I have about 5 minutes for Q&A. And I'd like to pick your mind on a few things, but I want this session to be engaging as possible. Let's share our ideas, let's share our opinions on what you are actually going to be seeing today. So I want to ask this question: how can we maintain the confidence, trust and integrity of the financial ecosystem with the current complexities we are witnessing with emerging technologies, where customers are not trusting enough of their financial data due to the concerns of fraud and scams? And that brings me to these two questions. Now, I'd like you to think about this two questions, and then I'll come back to you later in the presentation to pick your mind on it. So, having seated here and was listening to all the presentations of all the panelists that were ongoing, I picked up on a few things. A few things that kept ringing across all the multiple keynotes and all the speeches was the issue of trust, integrity, confidence, and collaborations. Trust, integrity, confidence, and collaborations. And at the heart of all this is a consumer. How do we protect the consumer? His data or her data, and how do we make their lives a lot more easier? So now let's look at the digital trust deficits in Africa, particularly having the notion or idea that a lot of the technologies that we are consuming today, we are not owners of those technologies. We are barely or merely, how do I put it, custodians of these technologies. Now, we are seeing the rise of AI, we are seeing the rise of blockchain, and all these other technologies in the operations of financial services or the delivery of financial services. So we are going to look at this, but I'm going to more of talk about that of Nigeria. So this is a brief data stack that I've presented here, where it shows that Africa loses over 4 billion annually to cybercrime. So my topic is basically going to be surrounded on cybercrime-related activities and cybersecurity issues in Africa. So Africa loses about 4 billion annually to cybercrime, and 3 in 5 people in Africa are actually not tech or digital savvy or digital literate. And how do we, bridge that gap? Particularly when we are talking about financial inclusion. Now, between May and December 2024, Nigeria moved from the 35th position to the 13th position, signaling a surge in cyber attacks. Why? Because of lack of a consolidated effort in fighting cybercrime-related activities. And that brought it to being a tier 3 level in cybercrime-related activities. And that's actually statistics from the Global Threat Index last year. Now, the country also lost about 52 billion, which is approximately 32.6 million in 2024. And that's a 195% increase from 2023, and a staggering 17.6 times surge in fraud losses from 2.96 billion recorded in 2019. And I like the fact that the Director of Innovation and Strategy from CBN is here. Maybe she can also attest to some of these statistics. And additionally, only 37% of financial institutions in Nigeria reported fraud incidents, and 63% of these institutions are non-compliant. Now, most of the fraud are actually executed via mobile banking apps, which is USSD, SMS, phishing, and mobile wallet transactions account for about 34% of this, fraud and scam-related activities or cybercrime activities. Now, the top channel for fraudsters is social engineering, being the leading technique used. Now, why are we saying all this? One of the things the gentleman from FIU mentioned was the fact that during his keynote presentation was the fact that there's the lack of fragmented regulatory and compliance systems and institutions and agencies in Nigeria. And we can see that all these institutions and others, like even CBN, have been trying their very best to fight cyber crime-related activities from their various institutions or agencies. And that means there is no consolidated effort in trying to fight cyber crime-related activities in Nigeria. And therefore, there's the need to consolidate all this effort. And additionally, if you look at the news articles, these are just a few of the fraud reported in the media in Nigeria in 2024, and these are just a few. There's a whole lot of information out there that actually covers cybersecurity and fraud-related issues in Nigeria. Now, what is Ghana doing about this? I just want to use this as a test case for us to understand where the narrative is in Ghana. Now, in 2020, Ghana established the Cybersecurity Authority, which is an authority that has been consolidated to make sure that they take care of these few mandates, which is what? Regulate cybersecurity activities in Ghana. So all the other institutions that are fighting cybersecurity issues in Nigeria, when it comes to even, in Ghana, when it comes to even fighting crime, fraud, and scam-related issues in the financial space, has been formulated into the Cybersecurity Authority. And so their mandate is what? To regulate cybersecurity activities in Nigeria. In Ghana. And I think Nigeria can also do something similar like this. Additionally, lead national cybersecurity awareness campaigns. That's their second most important role or job. The third is coordinate cyber incident response activities. And this authority came into being with the establishment of the Cybersecurity Act in 2020 in Ghana. Now, what did this lead to? This led to the formation of a strong cyber ecosystem in Ghana, and that gave us a few recognitions. You can see there that according to the Global Cybersecurity Index, Ghana is actually ranked 10th in Africa for cybersecurity related issues when it comes to fighting or promoting the awareness creation and then regulating cybersecurity issues in Ghana. Now, we also achieved Tier 1 status, like I said or mentioned earlier. Nigeria achieved, or currently is at Tier 3, which is one of the lowest. Tier 3 in Africa. And Ghana is actually on a Tier 1 status. And what did that mean, or what does that mean? It means, look, we are recognized for strong legal, technical, and organizational frameworks in fighting cybersecurity and all these other issues. So, like I said, one of the things that I have noticed that is happening, or most of the speakers have alluded to, is the fact that they keep questioning or trying to find out what can we do to educate, to ensure that we are able to bridge the gap between the not so digital savvy and digital savvy people when it comes to awareness or education related issues on cybersecurity, digital financial services, fraud, and scams. What can we do? And the answer is here. You tell them a story. And this story should be one that mirrors their own experiences and are easily relatable. Okay? You tell them a story. You can do so in English or using the various local languages that presently exist in Nigeria. And by so doing, you help them recognize some of the signs and learn the lessons from these stories. And this brings me to the fact that, storytelling has always been with Africans. And Nigeria, having Nollywood, has been a trailblazer on that front. And so, one of the things that we are doing in Ghana is leverage on storytelling to educate the masses about digital financial fraud, cybersecurity related issues, and scams. So, we must also understand that digital literacy is a collaborative effort. And I think I mentioned that, and all the speakers also mentioned that collaboration is really important in this industry if we are to expect, some of these nuances or some of these loopholes to be avoided. And to advance financial inclusion, we need to champion digital financial literacy. So what is our solution? Like I said, the solution we are using in Ghana or leveraging on, because of the complexities involved in, understanding these complex technologies that we are all now talking about in this room, is to leverage on theater for development. And one of the things we have noticed that theater for development has always been a critical component in achieving this milestone. I remember when COVID struck, most people needed to be educated on what are the best practices to use or to leverage on in order to avoid getting the disease and all that. And a lot of the messages were shared through storytelling mechanisms and processes, or this module was applied in making sure that the message reached down to the masses. So these are just a few feedback from some of the people who actually saw what we are doing in Ghana, and these are some of their comments. They said, well, theater is a more effective way to raise awareness among Ghanaians about their rights and responsibilities than traditional lecture-based approaches. I mean, sitting here in this room, we can discuss all the problems and solutions, but then how do we get the message to the informal sector, people in the informal sector, particularly the market woman out there, the farmer in the village? How do they understand? Because they do not necessarily have or possess the kind of knowledge and knowledge that we have. Now, storytelling is a powerful tool we can leverage on because it helps connect better with our audience. It helps connect better with our audience. This is a very insightful and important piece of education. If this drama could be performed in various local languages, like I said, we perform this in local language as well. Now, so these are just a few of the comments that we got when we decided to go this route. Because sitting down and listening to all of you, I think we have been only focused so far leveraging on these emerging technologies to develop solutions. And I mean solutions that work for the informal sector. But we have not been able to counteract that, to leverage on other modules to achieve, or this technology, to achieve the nuances that we are actually talking about in this room right now. So then, last month, we decided to go on this, when we decided to go on this trajectory of leveraging on theater for development, we came out with a comedy play called Cyber Heist. And so Cyber Heist was basically a theatrical, thrilling, educational, yet entertaining and comical play that we designed to raise awareness about digital financial fraud, scams, data breaches, and cybersecurity threats in Ghana. And so at this juncture, I would like to say that we designed this Cyber Heist play to also protect the consumer of our products and services. And listening in here, I noticed a lot of fintechs are in this room. But then, when the data breaches come in, when the cyber attacks come in, how do you communicate that to your audience or to your consumers? Because consumer protection should be at the heart of what we are doing. And so I'd like to play that video to actually give you a brief insight into what we are doing. Thank you.
If it were to be me, look at my face. I could have killed a lot of people. See, I am sure there is a cyber heist on goes. And I am the next victim. No, what she's kind of
let's guess. You have been saying swap.
Exactly. Yes. So you know.
See, this is the future. This is tech. Even the first one I stressed. Let me tell you, this one I did not stress. I only set my number, my normal pin, and then your normal pin.
You know what? I think my family is under attack. Yes.
So this is part of our campaign awareness project, where we are hoping to use this platform, leverage on storytelling and education to sensitize our people, irrespective of their jurisdiction.
So, Mr. Thompson, we have frozen your account, and then we have to recover the funds. But please, can we do something that is very simple for all of us? Please do not share your personal details over the phone. And you, do not share your personal details over the phone. It is very dangerous.
Yes, thank you for that again. It shows that we are doing something right. So, as you can see, this is just the beginning, and we are using this.
I'm the one that submitted the CV to your company. Yes, I'm a lawyer. Well, I specialize in criminal law. It doesn't mean I'm a lawyer to criminals.
Okay, so sorry about that. So like I said, thank you for that. And then, this show was actually hosted once. It was a one show. And just like the National Theatre of Nigeria, we have a National Theatre with a capacity of about 1,005. And when this show was, brought on, we hosted half of that capacity. But currently we are in discussions with the Nigerian Fintech Association of Nigeria to bring this play, work with local partners here within the ecosystem to bring this play down to Nigeria as well, and to use this or leverage on this to educate the masses and even yourself, because as you're all aware, none of us in this room is even, free from cyber attacks. We can equally be hacked, we can equally be scammed, and we can irrespective of our knowledge in technology, or whether we work in fintech or we don't work in fintech, whether we work with regulators or not, we are all at risk of being scammed. And so this is just a lesson for all of us to take this seriously. Now, cyber heist basically is a prototype model for creative risk education. So if you notice from the video, you will see that one of the things we did was to, in as much as pinpoint some of the issues that are happening, we also bring in the solutions. So there's a problem that is created and a solution is communicated likewise. So the internet or the media was awash with publications on this play when we actually debuted it on 1st May 2020. Did I say 1st May? No, 2nd May. 2nd May 2025. And we are hoping to bring this as a public-private collaboration between our industries. Because I think one of the things we kept mentioning was cross-border payments. But then, when a hack happens here, when a scam happens here, it can equally affect all of us, irrespective of jurisdiction. So, now, one of the things I want to do is to also, before I end my presentation, propose this as, let's make sure we all work together to propose or leverage on this platform or leverage on this storytelling narrative to create a national cyber awareness strategy or onboard processes for digital services. So these are just some of the scenes from the play. And then now one of the things I am happy about in Ghana and what we are doing, particularly with the regulators, is that we've got massive support from all the regulators, from the central bank to the Ministry of Communications, Digital Technology and Innovation, as well as the Cybersecurity Authority, Data Protection Commission of Ghana, and even the industries or the companies involved or partaking of the industry. And so what we did was we invited the regulators to the table, and this was the representative of the Cybersecurity Authority. And after the play, this was actually his feedback. He said what? He has learned a lot, and in fact, all the boxes were ticked for him, particularly with what we depicted in the play. He said what? Account takeover was actually identified, Momo fraud, fake online shops like that of Instagram. And to tell you a story, I've actually been a victim of that before, irrespective of the, how protected you think you are. And then recruitment scams, fake data sale, brand impersonation, investment scams, blackmail, cyberbullying, loan app frauds, man in the middle, phishing, and office cybersecurity tips, and many more. So then, that brings me to the fact that, this process or this module is not nothing essentially new. It has been used before, and it can still be used to actually help eradicate some of these issues we are identifying. And after the play, some of the feedback from our participants. I enjoyed every bit of the show. Educating the people and the audience on internet fraud is a brilliant addition to the play. Very educative. It was an excellent performance, and the list goes on. So at this juncture, I would not like to waste much of your time. And like I said earlier on, we had massive support from government institutions. And then these were actually our sponsors. Fintech companies were there, banks, and then even the telcos were actually in support of what we're doing. And so this is just the beginning, and we are hoping to leverage on this to reach down to the masses. Now, one thing we are also doing is to work with governments and NGOs to raise between $500,000 to $1 million to take this campaign awareness program to the masses, to those in regions that we cannot, or this information cannot get to, or the discussions we are having here cannot get to. So we're actually raising, the process of raising about $500,000 to $1 million to do that. All through, and we are planning to do that in the entirety of the country. And these were also our partners for the program. So at this juncture, I'd like to say thank you. And thank you for listening attentively. Those are my details. Once you scan the QR code, it brings you directly to my WhatsApp, and that's my email, and any other information you would like to find out about me. And I mean, we are welcome to have any discussions about fintech engagement and in Ghana and even in Africa, because I also serve on the board of the African Fintech Network that has an office here. But before I close, I want to bring something to the attention of all of you. I remember one of the things that we are lacking in Africa is the common regulatory framework across the regions. And I'd like to say that Ghana and Rwanda has started something I think CBN, for instance, can take advantage of, which is the FinTech License Passport Framework. FinTech License Passport Framework. That is to say that if you are in Rwanda and you have, or you run a FinTech business in Rwanda, if you want to expand actually to Ghana, it becomes very easy. You do not need to go through all the hurdles when it comes to the cost issues and, sieving through the regulatory issues when it comes to setting up a business in Ghana, and vice versa. So Ghana and Rwanda is championing this FinTech License Passport Framework initiative, and I think all other FinTech ecosystems or countries or regulators must come on board to make sure this works for Africa, so that we can enable and achieve a faster cross-border transactions. Thank you.
No question. Thank you so very much. Please can you put your hands together for Martin Awaga, President of Ghana FinTech and Payment Association. Interestingly enough, Nigeria's theater is over 4,500. So I guess that's the seating capacity of the Nigerian National Theater. I think Sanef Creative is doing so much with regards to that. It's impressive that it's Ghana that's actually, frontlining these kinds of innovations, and I think it's something we here in Nigeria should actually open up to. Theater communications are very good mediums, as a matter of fact, that we can use to communicate a lot of these issues, and I'm glad that Ghana is doing so well. Please can you put your hands together for Mr. Martins Awaga one more time. Quickly, ladies and gentlemen, we are moving into the next round table, or what you might want to call panel as a matter of fact, on consumer protection from borders to bridges, empowering consumers in the digital age through a multi-stakeholder approach. And to moderate this particular panel session or roundtable, we would like to invite the program manager of Alliance for Innovative Regulation, Grace Matubula, to come up as she takes her seat. Please can you put your hands together for her? Thank you. To join her on the panel, I would like to invite Ms. Freda Bruce Bennett, Director of Consumer Affairs Bureau at the Nigerian Communications Commission, NCC, to come please join her up here. Thank you very much. Of course, Dr. Chinyere Tonieke is here, Group Head of Digital Banking, Globus Bank Limited. Please put your hands together for her. I see her having some conversation with the chairman.
Are you able to hear?
This is interesting. Great. And I want to also, I will come to you. Let me have Country Manager Jumo Chinedu Aineze, please, as he comes up to join them on the panel. Chinedu, you are the only man here. All right. Is this what Jumo is about? Taking good care of the market, because the future is female, as they say, and it's important that we look at that as a matter of fact. Well, we have Chinedu up here. Also joining us virtually, I have Ms. Umtubank Magolego Ungobeni, Executive Senior Legal Advisor for National Credit Regulator, South Africa. I hope you're here. Thank you. It's good to see you. And finally, Professor Chizo Indukwe Okafo, Executive Director of Consumer Advocacy and Empowerment Foundation, CADEF, is joining us as a matter of fact. So we are going to be handing over to Grace, just as we've discussed. You know how it goes. Over to you.
Can you hear me? Okay, thank you very much. Good afternoon, everyone. My name is Grace Matewula from the Alliance for Innovative Regulation, and I've got the pleasure of moderating this panel discussion on practical strategies and multi-stakeholder approaches for addressing consumer protection in this digital age. So as AIR, we run programs that actually leverage a multi-stakeholder approach to solve for real-world problems that affect consumers of financial services, that affect regulators and industry as well. So this discussion is really close to our heart. We also run strategic advisory and capacity building programs for central banks and regulators, where we help them in the process of adopting innovation and strategies for regulation and supervision. I would like to welcome our panelists here, both virtually and in person, for this discussion. And we're going to just get straight into it. So we're going to begin with the cross-border focus. So with digital financial services expanding across the borders, as we've heard about, especially in the form of payments, lending, and remittances, there are many considerations that we need to take into account, in protecting consumers from harm. So at this point, I want to just get into cross-border lending as our first landing point. And Tufan, this is for you, this question. So South Africa has a really advanced credit regulatory framework, and I know that the National Credit Regulator is doing quite a lot in regulatory framework harmonization in the credit field, especially within the SADC region, because that's where South Africa is based. So the question for you is, what strategies can harmonize credit regulation frameworks across African borders so that consumers everywhere receive consistent protection, whilst respecting national sovereignty? Did you get that question?
Thank you. Yes, thank you, Grace. I got the question, and I hope everyone else can hear me. Good afternoon to all the esteemed guests. It's an honor for me to join this panel to discuss this important topic that is at the core of the National Credit Regulator's function as the regulator of consumer credit in South Africa. Now, coming to the harmonization of strategies for lending practices, I think I will start off with an ideal approach. Ideally, I think with harmonization, it should be a top-to-bottom approach in terms of which countries in different jurisdictions develop binding treaties or protocols and agree on minimum lending standards, such as minimum disclosures in credit contracts, prevention of reckless lending, as well as the avoidance of excessive cost of credit. And the next step will then be to align domestic laws to the different countries' standards and treaties that have been agreed upon. And in concluding this approach, you will then have the regulators institutionalizing and implementing the agreements, and the regulated entities also implementing the laws. So this would be an ideal top-to-bottom approach. And this approach will also ideally benefit from continuous capacity building amongst the participating countries, where there is capacity building, information sharing initiatives to ensure continuous alignment. But I think we all know that this top-to-bottom approach can be slow. We know that treaty negotiations and ratification can be slow and politically complex, which is why the other approach that the NCR has been following is the bottom-up approach, if I can call it that, where we proactively as regulators and our fellow regulators across the region will work on harmonizing the lending laws without waiting for treaties and protocols. And in this instance, we essentially just conclude memorandum of understanding, which will underpin this voluntary alignment between the regulators in the different countries. And also what we will do is to, through participation in forums such as this, international forums, agree to adopt best practice principles as a way of achieving harmonization. And also lastly, I think when it comes to credit or lending practices, it is also important that we have an integration of regional credit infrastructure, such as the interconnection of credit bureaus, to further entrench this harmonization. So essentially, there's just two approaches. The one that relies heavily on treaties, or the voluntary one that is within the control of the regulators. And one of the critical elements of achieving harmonization that I must mention is the adoption of principle-based legislation, which set out high-level objectives and outcomes, as opposed to a rule-based legislation that will prescribe, rigid rules. The benefit of a principle-based legislation that can be adopted by the participating countries will allow easy adaptation to economic, cultural, infrastructure variances that you will find in the different countries, and will essentially assist in avoiding conflict that can be caused by a one-size-fits-all. So, but the only challenge essentially with this kind of a voluntary approach is that it's not always easy to implement enforcement mechanism, as you would accept an effective regulatory framework must be embedded on the ability to enforce. So with a voluntary mechanism where there is a bottom-up approach, it is always difficult for regulators to implement enforcement mechanism in countries where they do not have the authority to do so.
Okay, thanks Tupang for that on the bottom-up voluntary and the formal top-down approach in forms of treaties. So I see that Adama has joined us virtually. Adama, can you hear us? Okay, all right. Maybe let's move on whilst we wait for her to join. Let's move over to you, Professor Chizo. So we've heard from a regulator, and so we want to hear from the voice of the consumer. And so considering the work that you've done at KDF, what practices are you seeing when it comes to cross-border services, covering payments, lending and remittances? So what harmful practices are you seeing? And secondly, given these harms, what strategies do you believe can be implemented to ensure that some of these cross-border strategies, as explained by our colleague from the NCR, can translate into real, tangible change for the consumer on the ground? Over to you, Prof. I think you're on mute. If you can unmute yourself.
Yeah, thank you very much for having me at this program. Good afternoon, good morning, depending on where you're watching from. It's a pleasure to be here and representing consumers. I was watching the earlier session, and one of the challenges I realized is they were discussing that regulators are not brought on the table early enough. I mean, that fintech companies are not brought to the table. But the other part of it is that consumers are not brought to the table early enough. They're always brought later on. And some of the practices of unfair lending that we've seen, some of the challenges and concerns that we've seen people complain about, one is the hidden and excessive fees. They tend to have undisclosed or poorly disclosed fees, currency conversion charges, and deductions that significantly reduce the remittance values. And so you think you're sending $100 equivalency to another country, but unfortunately what you find out is that the money is shorted, not only from the sending banking, but from the receiving bank. There's also predatory cross-border lending activities that has been reported, where digital lenders that operate across borders often, sometimes, not all of them, implement exploitive interest rates and abusive collection practices. that targets people. But another major issue that needs to be addressed is that inadequate dispute resolution mechanisms, whether it's a language barrier, communication barrier, they often experience difficulties resolving complaints with foreign financial services either due to jurisdictional challenges or lack of a clear recourse path that can be taken. The issue of data privacy violations, frequently because there's no harmonization in the data privacy, there could be either collect excessive personal data without appropriate consent, or may share this information with third parties beyond the local country's jurisdiction. There's misleading marketing, cross-border misleading marketing services, lack of transparency or transaction transparency, such as transaction status, processing time, and the complete journey of their funds. You asked about strategies for strengthening consumer protection. One thing that is extremely important that the previous speakers spoke about is regulatory harmonization and cooperation. It has to move beyond an informal arrangement, but make it formal. Establish a formal cooperation mechanisms between the different central banks and regulatory bodies to address cross-border violations. There has to be a buy-in and a collaboration. There also has to be a simplified disclosure of requirements. So either establishing a standardized, to mandate a standardized, simple disclosure of all fees and time frames, and terms of transaction upfront in plain language that an average consumer can understand. We need to have digital financial literacy campaigns across borders, launched and targeted, focusing on the risks and the consumer rights, their risks and the rights, especially in communities that are remittance dependent. There needs to be a regional consumer protection network, strengthen alliances within other African consumers protection. We do have in East Africa, South Africa, some set of strengthened alliance, but it should be cross-border, even moving into Western Africa. There has to be an easy setup and access to dispute resolution platform, digital first, multi-language compliance systems that allow consumers to escalate issues through local channels, even when they're dealing with foreign providers. I also believe that we need to establish testing environments for cross-border financial innovations. So regulatory sandboxes that has a consumer protection focus will be very helpful. And then corporate accountability framework require foreign and cross-border financial services providers to establish local accountability mechanisms, including local representatives responsible for consumer protection compliance with the local consumer protection agencies as well as NGOs. So, to round up, I would say that in collaboration, we have to have equal decision-making power, transparent engagement processes, resource support for consumer groups, independent monitoring mechanisms, and a bottom-up input will be very helpful. Thank you.
Thank you very much. So, you mentioned data privacy violations being one of the consumer harms, and I think it's a big topic. So I would actually like to bring Adama into the conversation right now. Can you hear me? Can you hear us? Can you talk? Okay. Yes, we can hear you. Wonderful. So, data is one of the key enablers of cross-border transactions. If you look at KYC requirements, as well as AML and fraud prevention requirements. So, according to you, what strategies can be employed to harmonize data protection laws across the African nations?
Thank you so much. Good afternoon, everyone, or good morning. So, in response to the question, I think one of the things we have to be looking out for is more like the regional harmonization. So, while most of the countries in Africa have been able to have its own, data protection laws, we find that there are a lot of things that may be part of the core principles, and then the legal basis for transparent data, whatever it may be, every other thing. Many countries are very unique in what they want and what they expect. When it comes to the financial sector, I think one of the things we need to be looking out for is on regional levels and then on continental levels. I'll use the West Africa as the case study. So recently, the ECOWAS has started its review of the Supplementary Act on Data Protection and Privacy. Now, the idea is to standardize cross-border data flows, across the West African countries. And this, while it does not even take away the fact that
sorry, there seems to be a bit of a background noise coming from your side. Some feedback. So we can't hear you properly. Maybe let's come back to you. I'm not sure if you can see if you can sort out your connection. So okay, I'm gonna turn our attention to you, Frida, in relation to rural consumers. Mobile phones have really added a lot of consumers or given them access to digital financial services, especially in sub-Saharan Africa. In fact, it's probably one of the single most important channel for inclusion. So, considering the limited digital literacy, language gaps, infrastructure barriers, and other challenges affecting rural mobile subscribers, what multi-stakeholder collaborative efforts can be used to ensure that they receive good services, are educated properly, as we heard Professor Chizo mentioning, as well as having their complaints resolved promptly and effectively?
Thank you very much. I hope I'm audible. My mics. And thanks to RegtechAfrica for this invitation. I think this is a very critical point, especially from the perspective of the Nigerian Communications Commission. As we all know what a government agency is, our primary focus, no matter which sector, is to meet the needs of the mass populace, to meet the needs of the consumers. I'll give a background, if you don't mind. Obviously, from the telecom sector, what is our responsibility? It is connectivity. Connectivity ubiquitous across the nation. If you go into the Nigerian Communications Act, Section 1C, it tells us that, amongst other things, that we should bring the best quality and the widest availability of connectivity to Nigerians, and this is one of the key things. Obviously, I'm sitting here as the Director of Consumer Affairs, and I'll tell you some of the initiatives on the NCC side before I delve into the big meat of the question. One is the Consumer Code of Practice. This is a mandatory document that every licensee of the Commission must provide. It details transparency, redress mechanisms, customer service, billing, basically details of what they must do to ensure that the needs of the consumers are met. They must provide it, the NCC must okay it, they must have it printed in 2 national dailies and also pasted on their websites and in their customer care centers so that the consumers understand their rights. We also have our complaints management mechanisms, and the Commission has many, as well as mandating the operators to have the call centers. The NCC also has its *62# free toll-free number that any consumer can call if they don't have enough comfort with how their complaints have been managed by their mobile network operators. They can also access us on our social media handles, and we have a consumer management system, consumer complaints management system, where we can see real time, we're just in the process of doing the final touches, all the complaints that have been received by the operators concerning the consumers, and we can tell those that have been treated and what is being done, so we can put pressure to ensure that they are all treated. We also have what we've done recently, as Nigerians know, the tariff simplification, where we have ensured that the operators simplify the information they provide on tariffs. We have caused them to reduce the tariff bundles so that people actually know in true terms exactly what bundles they are taking, how much every last bit of that costs. Also, we are in a digital space, and we have the child online protection. We do know how delicate the young ones are in this digital space. And we are talking about internet fraud. Imagine our little children. So the NCC, aligning with the International Telecoms Union, has domesticated the child online safety, where we provide pamphlets, trainings for teachers, for parents, and for the children as well. Of course, we have a lot of consumer awareness events. I'll talk about that later, and as well as data protection. So going back to the crux of your question, our rural dwellers. Our rural dwellers are very key. Why? Like I'd already said, in section 1C of the NCA 2003, our act, it tells us that we need to provide the widest telecom services. And as any businessman knows, what guides investment is the potential for return on investment. When we go to the more rural areas, our operators naturally are not able to make sufficient returns. So what do? We're talking about connectivity, access for them, and services, telecom services. At this time, I'll go back to our act in section 112, that talks about, yes, 112, that talks about universal service. What does this do? Knowing that our operators are not able to go to the farthest areas, the Commission, through the Universal Service Provision Fund and the service, ensures that we, as the Commission and the USPF, can provide subsidized services with the operators, providing network services there, based transceiver stations, basically ensuring the availability of services in areas where it's not commercially viable for the operators to go, as well as also carrying out various interventions, in schools and localities in the more rural areas, provided free of charge. In addition, we do understand that even with this, it's still difficult, which is why we have our co-location and infrastructure sharing regulation. What does this do? This ensures that rather than one operator citing a site, that they are all able to co-locate and therefore reduce expenses, and therefore we can have broader reach. In addition, NCC believes in technology neutrality. As we're going into more connectivity, one of the things we see is the fact that technology, especially through satellite, is gaining traction. So we encourage the operators, obviously, to partner with the satellite firms so that they can backhaul the traffic. That way, it's more affordable than being able to lay fiber while we try to grow that. That's part of what we've done to ensure our rural areas has connectivity. Now we talk about the rights of these our rural dwellers. Once again, permit me, I go back to our act, and section 1G of our act. It tells us that we need to protect the rights of our consumers. And I think as a government, you understand that your first and your primary constituency are the citizens of the nation. How do we then, as NCC, protect the rights of the consumers? It's knowledge. We understand that our rural dwellers are likely to know less about their rights, and I think that is a given. So what do? I'll take, for example, in the last few days, I had to, conclude an approval memo for us to have a program, which is part of our activities on radio. What are we going to talk about? Topical issues. How do we go about this? We understand that through our radio, we have a coverage potential of about 80 million Nigerians, and that the people in the rural area are better served by the means of radio connectivity. So we're going to go online across all our geopolitical zones using our zonal offices across the different zones. And we will have presenters who will speak in the local dialect, addressing the issues that are of importance to those consumers. And they can as well phone in and get information and ask questions and get clarification so that they know the rights and opportunities they have as consumers. At the same time, we also have different forums that we use to pass information. The other day, I had a meeting with somebody who had given a contract, and they are meant to produce different videos, short videos, across the different, on different topical issues as well, in the major languages, Igbo, Yoruba, Hausa, Pidgin, and of course English. And all our consumer documents are actually made in the different languages. At the same time, we have, let's take for example, rural dwellers. We have the marketplace conversations where we go to the markets, to the rural people, and talk to them and address their issues at their level. Sometimes we have to go down to Pidgin English. I have spoken in events where I've had to speak in Pidgin to ensure that I'm carrying everybody along. We also have events where we have, I think it's the one, I can't even remember the name, just forgive me, where we go to the area councils, to the local governments. We deal with their chiefs. They talk to us and they ask us, and we're able to find out the burning points, the pain points in that area. And what do? We have that 1-2-day event, and they gather their people and they talk to us. We bring the mobile network operators there as well to deal with and answer their questions. Finally, talking about complaints, we have our even the operators. If you call any of the operators' numbers now, if you go to their IVR system, it will ask you, is it English, Igbo, Yoruba, Hausa? So that this is what is mandated by the NCC to ensure we carry out most times the vast majority of Nigerians. And if consumers are not satisfied with the complaint, we have our Tier 2 622 number, toll-free, which they call. This is also in the various languages. We have started something for our, especially considering that we have a lot of Nigerians in the rural area using feature phones where they can have a USSD code, *62#, and any information they need is provided for them free. They call that free, and NCC provides in the various languages. I know we have not covered everything, but the Commission keeps working in a multi-stakeholder way to ensure either with our operators, let's say consumers, we work with consumer groups. We have the Industry Consumer Advocacy Forum. We work with them. We work with different civil societies, consumer groups, even at the grassroots level. One of the things we're doing now is that we're ensuring that we are getting granular data, because we get weekly data from the operators, and we are now going to the local government level so that we understand the pain points per local government and then create and strategize solutions to address that. Thank you.
Thank you so much for that. So I would like to continue on the theme of vulnerable consumers, and this time how we balance it with the business growth of, of our service providers. So I want to just hear from our service providers. I'm going to start with you, Dr. Chinyere. So someone who has focused on driving innovation, business growth, and customer-centric solutions in the financial services industry, how do you balance that drive for innovation and business growth with the need to ensure that digital banking products remain safe, user-friendly, and inclusive, particularly for the more vulnerable consumers? I mean, we've heard it spoken by both Dr. Freda and Professor Chizo about the whole language barrier, overcoming that language barrier. So I'd like to just hear from you on that.
All right. Thank you for that question. I hope I'm very audible. Is it okay now? Can you hear me? Yeah, I should be first. Hi everyone, good afternoon. Is it better now? All right, so First of all, I want to thank RegTech team for this opportunity to be on this panel. And speaking to the question, how do you balance business growth with safety, customer safety, and also making your products user-friendly, especially as regards a vulnerable group? I will start by saying that as a business, first thing that comes to mind is that what's at the back of every business, at the mind of every business, of course, is to make profits. Yeah? But the truth is, for you to make that profit, somebody has to buy your product or your service. And who is that person that is buying your product or your service? It's your customer. And if you know you really want your business to grow, and the people that you're providing this service for are the ones that are paying for that business, it means that the first thing you must consider is your customer. I remember in the bank, we usually say customer is king. But the question is this: is customer king because they can come to the bank and shout at everybody and get whatever they want and walk away? Of course, that's not the truth. Customer is king because it's customer that is using that your product. It is a customer that you're providing that service or the product for. So you must have that at the back of your mind. That being said, it means that you should also consider the different target groups that you are focusing on. Now, I'm talking about the vulnerable groups. It also means that you should understand the level of understanding, the level of exposure of your customers, and then be able to build a product that will be able to be user-friendly, make them able to use that solution. Remember what I said first. If your customer is the one that will buy your product, then you should be able to make the product in such a way that it is simple enough for them to be able to adopt your product, use it, and continuously use it. One thing we should also bear in mind is that when we're talking about customers, it's not just about the first sale. It's about the repeat sale, repeat usage. And so if my product is such that my customer will use it today and then dump it, then I've not done a good job. So for me to do a good job, I must always be able to carry my customer along. I must be able to engage my customer to really understand what their needs are. And if I have that engagement and I am able to interpret clearly what their needs are, then I'll be able to build my product to be able to make that impact to them in solving their problems. It is by way of solving their problems that they will be able to continuously use my product, and then that profit I'm targeting, I'll be able to make that profit. So sometimes businesses, first of all, place the profit in front, thinking that by first selling your product to customers, and you'll be able to make the profit. If you place the profit in front, you're really making a big mistake, because it is that same customer that will be able to come and repeatedly buy that product and service, and that's what will ensure your business growth. That's one. Then secondly, one thing also that we consider in innovation. Innovation does not mean that you are the first to go to market. Innovation is actually you are able to identify the need and you're able to solve the need that will make an impact. It may be a new thing in the market. It might be that you're adding value to something that is already existing in the market. Truly, as a bank, we have multiple banks, for example, in Nigeria today, and most of us sell the same thing. But what makes you an innovative bank is where you are able to add value to whatever you're selling, making yourself unique or creating a brand for yourself that customers will know you for this thing. And so, being innovative is also, you have to bear in mind. And one thing else that we also have to understand is that protecting the customer is not an afterthought. It's something that you have to embed it in your innovation journey. It's not that you have built the product, a fantastic product, and then give it out to your customer, and afterwards you begin to think about, oh, I didn't think about how to protect my customer. No. It has to be a feature that is very important, very necessary. You build it from start. And so that privacy, that protection, that safety must be built into your product or your service from the beginning. Not that you have rolled out and then you come back and say, oh, we made a mistake. You roll back and begin to think of how to protect your customer. It means that you have made a mistake. Again, remember that talking about building a product is not something that is one person that is building it. It involves multi-stakeholders, right? So, for example, in the bank, if I'm speaking from a product management point of view, as a product manager, right, I'm not solely handling that product. I should also bear in mind that I have my tech team that are working with me. I have my operations team that are in the forefront attending to my customers. I have my marketers as well that sell the products. I have my contact center that customers will run back to when there is a need that they need to clarify something. And I have the governance team who will also review whatever I'm doing and to be sure that I'm in line with regulation. Thankfully, in the bank, we are highly regulated. And I'm happy that CBN is here too, yeah? So we are highly regulated. And so when I have this at the back of my mind, I should also be able to, make sure that I carry along all these stakeholders at the point of product, build, even before delivering it to my customer, knowing fully that all these stakeholders, they have an impact to make on that product, right? The regulatory team, the compliance team, the audit team, the control must always provide their input whenever this product or this service is being developed. What about the contact center? Imagine when a customer has bought your product or your service and then calls your contact center. And contact center says, oh, sorry, I don't know what you're talking about. It's a mistake. So if I'm building a product that should be able to take care of that vulnerability, I should have it at the back of my mind. My contact center must be well carried along to be able to know the responses they will provide for my customers whenever they call in. Now, what about my marketers that are spread across? Or am I that product manager that will just sit at the comfort of my office in the head office and then I roll out my products or give my marketers target, go and sell? They really need to understand the product. What is this product about? What is this service about? So they will be able to engage customer. Remember, I may not be able to be on the field all the time or meeting the customers one by one, but I have my marketers out there who are always interacting with my customers. So when we are talking about customer education, it's not just about rolling out flyers, doing radio jingles or whatever. How many of these vulnerable customers might even have access to the newspapers? How many of them might even have access to radio jingles? How many of them might have access to social media? But through my branch network, where I have my marketers out there, I should be able to educate them as well. While I'm doing my radio jingles, while I'm doing my social media campaign, while I'm doing my email marketing and doing all sorts, I should also be ensure that my marketers are well educated about the features of this product so that whenever any customer calls in requesting for clarification on whatever or issue that they are having, my account officers should be able to provide a clear response to them, and that will also, remember what I said, repeat usage or repeat buying of my product. If I'm not able to provide all that support for my customer, of course, they will not be able to come back tomorrow. And then you'll be recording high churn rates. Who in business will be happy to be recording such high churn rate? And again, another thing that we'll also look at is this. Do we review our product? It's not enough to just build a product and then roll it out there and believe that you have done the work. Or you say, okay, I've done it, I've rolled out an innovative product, oh, that nobody has it in the market. I've done the best. Remember, we are also in a competitive market. So if you don't review your product, another person can pick your product and then look at the shortfalls of your product, build something. We are talking about innovation. We say innovation is not just about building something new. It could be about adding value to something that is existing. And so if I roll out that my product and I don't care about the feedback I get from my market, somebody can pick it up from there, identify those loopholes, build something on top of it, and roll it out. And so for me to maintain that business growth, maintain that profitability, as well as maintaining the customer base that will help me to generate that profit, I should ensure that I provide that consumer education, ensure that my all the stakeholders are carried along, ensure that security is not a buzzword, it's not an afterthought, it's something that I must build in the process of developing that product. Ensure also that my customer is duly protected, and I always carry them along and always educate them on what they need to do to make sure that they remain in business. Now, there is a story I saw recently. I know every one of us is aware about the story about Nokia, how they fell out of business, or Kodak and all that. But I saw one recent story just last year, I think around September last year, about Tupperware, also I think it's a US company, Tupperware, yeah, and they filed for bankruptcy. One of the reasons why they filed for that bankruptcy, according to what I read in the media, is that one, they were not able to, one thing is that their product is one of the most fantastic products in the market. But then, they were not able to continuously evolve. They were not able to continuously follow the trend. And so because of that, at some point, they could not remain in business. At some point, even their finances were not managed. I'm not talking about financial management now. I'm talking about ability to always know what is happening, what is involved, what is that customer preference. Customer changing because their preferences are continuously changing. What is happening in the market that we need to evolve, even in the financial industry? Because I picked a note from that while they were not, always reviewing their product, whether they really meet the need of the customer or their consumers in the market, also in the financial industry, that is one thing that we should also know. We're talking about AI, robotics, and all that. How many of us are always reviewing what we are doing to ensure that we remain or that we follow the trend, because customers' preferences continuously evolve, continuously change, and so we must be always ready to know what is happening in the industry, happening in the system, and align ourselves with those changes to be able to remain in business. Lastly, but not the least, we have been talking about collaboration, and we know we might not be able to meet all the customers at the same time. And so we believe in collaboration. We don't see fintechs, for example, as our competitors. We see them as our collaborators. And so what do? We align, we partner with them in terms of bringing products that will be able to meet the needs of the customers. But one thing is for sure, in this collaboration, we are also very careful to ensure that we don't fall out of regulation. Like I said, we are highly regulated. We don't fall out of regulation. We ensure that in every collaborative move that we're making, we ensure that those partners are in line with the regulatory requirement, because we want to protect ourselves. We want to protect our customers. We also want to protect you, the partner. Can you imagine if I collaborate with a partner today that is not following the regulatory principles, and tomorrow something happens? Maybe the business is fined a huge amount of money that will now make them to go into bankruptcy. What happens to those customers that have, enjoyed the services from them by way of the collaboration that we have with them? So it's also going to affect us. And so we ensure that we make sure that the partners partners that we're collaborating are in line with the regulatory requirements before we onboard them, because, number one, we want to protect our customers. We want to protect our partners. We also want to protect ourselves. Thank you very much.
Thank you very much. I think the message is very simple, The consumers are the ones that keep you in business, therefore keep the consumers happy.
We might want to take some questions at this point in time.
Can I just give our brother an opportunity to answer a question, and we can take questions?
Pardon me, please kindly and fully, wholesomely give him the opportunity. He needs that, because I can imagine how it feels right now seated among women. All right.
Okay, yes. So Chinedu, we've heard her speak about innovation and the importance of using innovation for protection of consumers. So I know Jumo leverages AI and machine learning to deliver inclusive financial services. AI is frightening for many people because we've seen that it's created a lot of harm for consumers, and obviously it keeps regulators and other service providers on their toes. So as an industry player yourself, what can industry players do in collaboration with regulators and consumer advocates to ensure ethical AI practices that prioritize consumer privacy and fairness?
Okay, thank you, Grace, and thank you to the RegTech team for inviting Jumo to this conference. For us, without AI, we would have been dead a long time ago. Jumo is one company that uses AI and machine learning to operate in over 14 countries and ensure that the underserved members of the community have access to financial services. And we do that very well by ensuring that they have access to financial products and services. And we don't do that by ourselves. We do that by the partnerships we have with our banks, mobile network operators, and people who have wallets. In terms of AI is everywhere. Our smart devices, our wallet, financial services solutions. You can see AI in all those products and services. And for us, something that is key within us is to ensure that we use AI ethically as one of the serious industry players. And to give you some scale about the kind of transactions we deal with, to date, we have processed over $7.1 billion in terms of loans that we have given out to different partners. And it will interest some of our stakeholders to know that we disburse over 3 million loans in a day. And we do that using AI and machine learning. And the kind of customers we engage with are people who just have maybe USSD solutions. They are not traditionally banked individuals. And for us, as an industry player, something that is critical for us is to ensure that AI is used ethically. And in response to the question Grace has asked, all of us, all the stakeholders, whether you're coming from the regulator perspective, whether you're an industry player like myself, and whether you're the consumer, the truth is that we all have to come together to ensure that people don't fear AI and see it as something that is a threat to either our jobs, or see it as something that we can work with to make sure that we can carry out services efficiently. And from our perspective, I'll categorize the responses for the industry players. So for us at Jumo, something we do very well is to have AI dedicated teams who help us to ensure that they monitor the different trends in terms of AI technology and ensure that we are following up with the regulations and all the standards. Something interesting we also do is to ensure that across our products, we do clear communication to our customers so that, if someone only understands Igbo or someone only understands Yoruba, they can interact with those products in the language that they're comfortable with. In terms of cybersecurity, making sure that we are ISO compliant, making sure that we follow data protection regulation across all the jurisdictions we operate in, that's something we do critically to ensure, because we deal with a lot of data and we work with different partners. So we ensure that the data is anonymized, in such a way that, biometric information about those users are not passed to us, right? Because imagine a lot of people's interaction with AI will be through ChatGPT. Imagine if OpenAI is hacked. A lot of sensitive information that will be available would scare a lot of stakeholders in this gathering because of how people trust the solution to be able to type simple things like letters and different prompts and requests that happen. From a regulatory perspective, for us, what we can do is to dialogue proactively with the regulators, ensure that we have different risk-based criteria. So if you're dealing with financial services, the risk will be different from health services and maybe a social media application. And in terms of having regulatory sandbox for us to come up with different AI models, test it, and ensure that the regulator is carried along is something that will be useful to us. And lastly, in terms of the regulator, interoperability between banks, different ecosystem providers is something that will be useful to us to ensure that, we can ensure that, AI is used ethically. Now, for our consumers, something we have done is to ensure that, customers are educated properly. We put in good feedback loops to ensure that they are able to, respond and tell us when, there are certain gaps they have noticed, and that's why we need the customer advocate. So in summary, I would say that all stakeholders need to collaborate together to ensure that, AI is used ethically and effectively in solving issues that affect humanity. Thank you.
Thank you very much for that. I said our MC was trying to move us along because in the interest of time. So maybe at this juncture, we can take questions. Over to you, MC.
Absolutely. Can we take one or two questions or comments? If there is none, then we are going to be going back to Grace to help us wrap up this session because we have one more session before we go in for networking and exhibition tour. Any comments or questions, ladies and gentlemen? It looks like they're enjoying this session so well, so please let me just move that back to you and then ask that perhaps we wrap up this section maybe in the next 5 to 10 minutes.
Okay, thank you very much. So, I'd like to just talk a bit about what we're doing at AIR. So we specialize in collaborative, multi-stakeholder approaches to address problems. So one of the big things that we are running in partnership with the West African Monetary Institute is a policy sprint, which is aimed at developing policy-driven solutions to tackle digital payment fraud in West Africa. I mean, our board is right on the left-hand side, on the right-hand side, apologies, where you can scan the QR code, and everyone is welcome to be part of this. So I would like to give the panelists an opportunity, as we wrap up, just to talk about what genuine collaboration looks like in real life. I mean, we understand theoretically what it could look like, but what does it really look like? And I do want to start with you, Mr. Chinedu, and then we'll hand over to others.
Okay, thank you. So as fintechs, we need to collaborate with different stakeholders. So for me, in real life, we'll be ensuring that the nurture the relationships that I have within the ecosystem and engage in conferences such as these to also be abreast of different technology trends and standards. Like this, we are able to engage with people who we never have met before. So that for me is a model for collaboration. Thank you.
Thank you so much. Over to Dr. Chinyere. What does it look like practically?
Okay, for me, collaboration can be with internal stakeholders. It could also be with external stakeholders. No business operates in a silo. You must rub off on another business. And how do you do that rub off? It could be to take on what the entity you're collaborating with has that you don't have. It could also be to give what you have. In all things, we have a handshake to be able to provide that beneficial solution or service or product to our customers. Thank you.
Thank you so much. Freda?
Thank you. I think for us at the NCC, what does genuine collaboration looks like? I think it starts with a shared understanding of the problem,
a mutual passion to see that situation change, co-creation and development of policies to address it, and a determination to bring about the change. And for this, we collaborate across various sectors. For example, from the consumer aspect, we have failed payments. When they make payments, it doesn't work. And that is not under the purview of the commission, of the operators. We have to relate with the central banks to help us collaborate with their banks, which is something we're doing. We have different consumer groups, we have the differently abled, and we have to ensure everyone is carried along. So we work with the different civil society groups, the consumer groups, to try and understand their needs and therefore couch solutions. When we listen to our regular consumers, we are paying, as the regulator, our first focus is the consumers. If we have our telecoms consumer parliament and you attend, you will think these mobile network operators are our enemies. As the complainants complain, we'll say, operator, respond to them now. Tell us what you're going to do. Tell us and you'll give us resolution. As we are here, thanks to RegtechAfrica, we have a booth out there. And I want to encourage any one of us. This is how genuine multi-stakeholder collaboration works. People have been going to our booths with different issues and we are dealing with it. And it's about understanding that every platform we have, we will use it to ensure that the customer who is king actually feels and has the trust in the regulator that he is indeed king.
Okay, thank you for that. Professor Chizo, over to you. What does genuine collaboration look like practically? Oh, we can't hear you. Maybe, Tufan, can you see if we can hear you? No, I think there's something wrong with the sound feed there. We can't hear any of our virtual participants. Let's just give it a few moments. Can you try talk again? Any one of you? No, okay, we can't hear you. So I think at this point we're just going to have to wrap up. Yeah, we unfortunately couldn't hear from our virtual participants on what collaboration looks like genuinely. So it's really clear from the discussions that there's no single stakeholder or single organization that can deal with consumer protection in isolation. We all really need to work together. I mean, gather at conferences like this and make ourselves available, be willing to be vulnerable, you know, to the consumers out there in order to move things forward and see each other as not as enemies, not as competitors, but as collaborators. So I'd like to thank everyone for joining us for this discussion, and I hope that it's really left you with some thoughts and challenged our thinking in terms of how we can help our consumers digitally. Thank you very much.
Thank you so very much, Grace. Please can you put your hands together for her? And she's done excellently at the time. Please can you come up here? I'd like to invite Mr. Cyril Okorigwe, of course, Mr. Graham, if he's in the house, to please come up quickly for us to have this snapshot while we are getting ready for the next session before we go in for our exhibition booths engagement. And then we'll come back for our last session for the day, where we're going to be wrapping up and then adjourning the day one for tomorrow. Ladies and gentlemen, I want to say a big thank you. Please, in the meantime, I'd like to ask every one of us who are seated, please, can we all be upstanding? While they are busy taking up their pictures, please, can we be all upstanding? All right, thank you very much. You know, can we do some little stretch exercises, because it's important, because some of you have been sitting down for quite a while. Please, I might have to make an announcement of a caveat emptor that whoever has a crack between the wrists is not responsible. It's not the state of your well-being before you engage in this. All right, can we do a hand raising up, please? Can we stretch our hands up? All right, okay, and then can we bring it down? All right, can we go back up forward this way? Please try not to go beyond your limits. Can we stand up again? Can we go forward a bit? All right. I can hear a crack on my own, but I'm safe. Can we go to the left? All right. Can we do the right? All right. Can we do the round waist and all that for those who have been sitting down? Left to the right now. Okay, I didn't say use your finger and do the round. Use your waist. Please, you can have your seat. Thank you very much. That will obviously give us some kind of ease. And then we're going to take a short speed networking and exhibition moment. But this time around, I would like to invite the moderator for this session, who have had wonderful deliberation with, Ms. Sadatu Saleh, Manager Regulatory Affairs at Stanbic IBTC Bank PLC. Please, can you put your hands together for her? Please clap for her, clap for her, clap for her, so that she knows that she is not here alone. And of course, my very good Oga at the top, the Chief Operating Officer at NFIU, Dr. Mohammed Jiya. Please, can you come up and join her as well, because we are going to be having this session, man. And a big welcome, of course, to the Manager Strategic Partnership at SomSop Africa. SomSop has been in the forefront with us. Mr. Tom Scoop is joining us, as a matter of fact, on this particular session. And I don't see Dr. Mohammed here. Is he here? Okay, he's coming. All right. Great. And then we will have those who are joining us virtually. I believe I have Femi Jayo Ola, Group Chief Conduct and Compliance Officer, Access Bank. Okay, he's here. Oh, fantastic. It's good to see you, Femi. We share the same Yoruba name. Please put your hands together for him. Clap, 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 clap. It's not easy. It's Access Bank. All right, I'm glad that you are here. And of course, we have some of those who are joining us virtually. We have virtual participants up. I know we have Mr. Edwin Woyonwon Harris Jr., the DG, which is the Director General of Intergovernment Action Group Against Money Laundering in West Africa, GIABA, is joining us online. And of course, we have Elizabeth Kelly as well, McCann, who is the Financial Crime and Risk Management Specialist at PwC, joining us as well. So at this point, I'm handing over to Madam Sadatu as you take over. Thank you very much. Please put on your microphones, and I'm very sure we will have a wonderful moment. So over to you, ma'am.
Am I audible, please?
Yes, you are.
Thank you very much. Good afternoon, everyone. My name is Adatu. Mr. Femi, you murdered my name. You will pay for it. Yes. So, my job is to facilitate an insightful, exciting, and inspiring session. And I'm looking forward to it, given the highly esteemed panelists I have. I promise you, if you don't participate or clap, you will not leave in here. Thank you. I want full participation, humbly requesting that. So I have Elizabeth on the line, Kelly. She's a financial crime compliance specialist with over 15 years of experience in risk management and regulatory advisory. And she holds a master's from Columbia University, and she's an ACAMS member. Welcome, Kelly. Good to have you. If I was to read the profile of Mr. Jiya, I'm sure we will not live here today. I'm humbled to have him here. As we all know, he's the CCO of Emerging Technologies and Innovations at NFIU, and he leads a number of institutions, groups, working groups, and all of that. So thank you for joining us, Mr. Jiya. And we have my very own Tom Scott, and he's the head of strategic partnership for Africa at SomSop. If one thing we don't know about, it's not a secret, but a lot of people don't know that about Tom. If he had maintained his golfing skills, he would have been more popular than Tiger Woods right now. And I have Edwin Harris. He's the Director General of GIABA, and he's a CFE and ACAMS, and he's here with us. Mr. Edwin, thank you for joining us. And I left the best for the last, being Mr. Femi. Mr. Femi happens to be my boss, so I'm loyal, sir. Thank you I'm sure he's done a good job with me over the years. Yeah, so thank you, and help me in welcoming all of them. Thank you. So we'll start immediately with Elizabeth, or blessed amongst men. Elizabeth, thank you for joining the session. Actually, I can't see Mr. Edwin. programs through a multi-stakeholder approach. So, Elizabeth, can you please explain to us what comes to mind once we hear that topic, please? Thank you.
Sure. So I would say there's a number of different things. I would say, what are the greatest challenges? Where has there been progress? And where is there room for additional work? So I would say some of the greatest challenges would be, I think, first and foremost, collaboration and across borders, within Africa, within regional dynamics, as well as internationally. There needs to be greater collaboration for a multi-stakeholder approach. I think one of the greatest challenges right now is probably customer privacy and ensuring that the customer's information, personal information, is secure. And so trust is a big issue. Ensuring that these collaborations are able to provide the necessary confidence that the customer's individual information is protected, so that when you need to screen for a PEP or you need to screen for any bad actors, the information is available from throughout Africa and within smaller regions and also internationally, and that data is accessible and accurate. There are a number of other challenges. I would say data integrity, ensuring that the data is accurate and that there is enough data to make decisions on. So if you're sharing data, you want to make sure that you're sharing the accurate data. I would also say that regulations are changing very frequently. So keeping abreast of the regulations and ensuring that you're mitigating any issues that might come up appropriately based on the regulations. And digital literacy, lack of access. There's a number of challenges that we can go in further as we continue the conversation. But there has been some progress, I think, from a multi-stakeholder approach. I think I read recently that the Nigerian Financial Intelligence Unit recently partnered with the UK's counter-Daesh communication center, which follows ISIS. So I think from that example, it's a good case study on how to approach it from a multi-stakeholder approach. And of course, there's like the Egmont group and Wolfsburg group and so forth that have had are good examples of multi-stakeholder approaches. But I'll pause there and let you continue with another question, and I can return to some of these points later in the conversation.
All right, thank you very much, Kelly. Trust is jointed communication among stakeholders. We'll come back to you in a bit. So I'll continue with you, Tom. So in addressing the challenges of CDD, what innovative approaches can be employed to overcome challenges in verifying CDDs, especially in regions with limited access to formal identification systems? Thank you.
Can you guys hear me? Yeah. Right. Okay, so there are a couple of things you can do, and especially if you've got a massive market. Customer due diligence is extremely important and it's regulated. So a couple of things that you can do is you can automate the process as much as you possibly can. There's been a lot of talk today about moving away from manual KYC and then also using the latest biometric technology that's out there. So where you've got where you need to conduct due diligence where there might not be, let's for example say smartphone penetration, you need to leverage agent networks, for example. So where there are where USSD journeys are normally followed, you need to get into the agent networks. You also need to leverage M&O data, and you need to do phone verification. So in a modern KYC process, the biometric authentication process has moved away from fingerprinting and into face match. So liveness checks and face match checks using a KYC process. So the digitization of the actual customer due diligence using, let's call it less formal forms of data that you can pull out of, M&O, SIM out of phone, IMEI data, where is the phone, what account is that phone with, where does that phone normally reside. These are forms of data that you can utilize to do due diligence, especially where you have populations that are informal with it, processed through informal ways. So, I mean, so you can actually spin up your own database. You can utilize that database to carry out reusable KYC processes. You can do AML checks on an ongoing basis. And that type of technology is the type of technology that regulators need to start adopting in order to carry out customer due diligence in a way that's obviously compliant. But especially in a country like Nigeria, where there's a tiered approach, right? So you've got tier 1 through 4, specific to how you would conduct due diligence on a customer. And tier 1, you would need a very complex process of KYC, but those tier 1 customers are going to be very digital. So it's very, very important that you can have some sort of software that you can orchestrate those processes. So there are various ways that you can do it. You need to move out of, obviously, any manual process. The process, and instead of, for example, using biometric fingerprint data, you use liveness and face match data that is available in the national database anyway.
Okay, so as a follow-up to that question, how does that combat financial crimes?
So it combats financial crime in many ways, and the biggest way that it was the process by which you can combat fin crime is automating AML. Okay, so for example, look, many KYC providers out there right now will entrench the AML process through the customer due diligence process. So when the customer is applying for an account, the AML process is actually built into it. So in other words, the checks are being done from an AML perspective at application. The customer then applies for an account and the due diligence gets done, the KYC process is finished and the customer is granted the account. Thereafter, you want to utilize the same system to do the transaction monitoring for that account, right? So you need to take the KYC data and you need to reuse it through the transaction, so through the transaction monitoring. The AML, the automated AML, needs to be built into the transaction monitoring process, or the business verification process as well. So the way that you reduce fraud through customer due diligence is essentially getting ahead of the actual transaction. I think there's been a lot of talk today about prevention rather than trying to then solve for fraud after the fact. So how do you do that? You automate the AML process. You prevent the transaction from going through before it happens. You flag it using automated rules that you can build into the engine that goes through to the compliance team, or in fact you can just automate the rejection of the transaction itself. So it is incredibly important. I think I saw that the central bank actually issued a statement, I think it was yesterday, about providing minimum standards for automated AML. I don't know if anyone's seen that yet. It came yesterday. So, automated AML is the biggest tool that we currently have that will prevent fraudulent activity, because platforms like ours are plugged into fraud network databases worldwide and in Africa and so on. So automating the process is the way that you prevent it rather than trying to go after the fact.
Okay, so preventive, being proactive rather than reactive, and then the automation of the CDD process would go a long way in preventing financial crimes from taking place. Okay, so I'll come over to you, Mr. Gia. You made mention of collaboration amongst regulators and all of that in your earlier presentation. And from our discussion over the period and from your experience and what you've shared with us over time, we keep talking about collaboration. Are we not collaborating enough? Is it just lip service we're applying to fighting crimes or combating financial crimes? Is there any political will? Is there any form of agreement to really wanting to fight those crimes from your standpoint? Thank you.
Thank you. Just as I said, we are collaborating, but we can do more. What I mean is there are a lot of benefits in collaborating, most especially with government agencies. One of the things that is making the crime to thrive in this country is that lack of collaboration enough. And because it is through strategic partnership and collaboration that 1 + 1 can be 3. Because you are bringing in the strength of different agencies and institutions. We've seen that recently last year. When there was a case, the presidency wrote to the NFIU that there is urgency to investigate this case. What we recommended was, let us set up a joint tax team, and the presidency took it. And they said tax team comprising NFIU, EFCC, ICPC, Code of Conduct Bureau, DSS, all of us, we have two people from the agency. We left our offices and met in a secluded location. Within 1 week, the intelligence we were able to bring out. Because when we are working on a subject, if there is information they need from counterpart FIU, I am there. If it is a public servant that they needed, whether he has declared the asset, the CCB guy is there. If it is something that the EFCC need to do, he is there. So that is how collaboration, because each of these institutions, we have our areas of strength. If we bring this strength together, it will go a long way to address the crimes we are trying to fight. But when we don't work in silos, like now even Mr. Jayola will know, there are information that they send to us at the FIU, but the other law enforcement agencies will still bombard them requesting for the same information. This is the kind of things we are saying. FIU, for instance, is set up to request to provide that intelligence. And that is why banks are mandated to report these threshold-based and suspicious transactions. But sometimes, because the agencies who want to do it alone, they will now prefer to go back directly to the banks, which is also hitting them. So this is the kind of things we are saying. By the time we work together, yes, NFIU, you have this data, give us this. Whatever we don't have, we reach back to. So you can see it is one point that may be hitting the reporting entities. Thank you.
Thank you very much, sir. As a follow-up to that question, hold it, please. As a follow-up to that question, so we're talking about political will, political commitment, and all of that. We can't keep setting up ad hoc committees for any sort of, like you mentioned, like you were set up to address a particular stuff that happened.
Yeah.
And we have 1 million of that takes place on a daily basis, which we cannot keep setting up those ad hoc committees to review to ensure that in a week those results are met. So just as with Ghana, who just exited the green what are other people doing right that we are not yet doing and we could do and adopt and move forward from just being reactive to proactive in the fight against financial crimes? Thank you.
Okay, thank you very much. You know, there are sometimes some things happen to you which will come like a blessing in disguise. Nigeria entry into the grey list in February 2023 was something we never liked and we never wanted it, but it comes as a blessing in the sense that it has allowed us as government agencies now to work together. You recall the 2022 Money Laundering Prohibition Act and Terrorism Prohibition Act established and strengthened the Interministerial Committee on AML-CFT. So now we have two statutory bodies, not ad hoc. In the AML-CFT, all the heads of anti-corruption agencies and supervisory authorities, together with the Minister of Justice, Minister of Interior, and Minister of Finance, are having regular meetings on deciding at the top level. Then at operational arm, what we have also decided to do to avoid on ad hoc basis, just as we say, is to have what we call an authorized officers forum, where we have middle-level officers from all these competent authorities meeting quarterly or, if there is need, on monthly basis to review on case-by-case basis issues relating to AML-CFT within the country and other criminal and fraudulent activities going on. So these are the platforms that are now established and are mandated to be meeting regularly. And it's one of the things that has helped us reach where we are now in terms of exiting the grey list, which we are hopeful by, because the report we have after submitting our last report, we are hopeful that Nigeria is on its way to exit the grey list soon, just like you mentioned that of Ghana. Thank you.
Thank you very much, sir. Mr. Edwin, thank you for joining us virtually. And considering the increased use of artisanal and small-scale gold mining by criminal groups for money laundering and terrorist financing in Africa, can you please take us through measures that can be taken to integrate these artisans into formal economies and prevent the exploitation by financial criminals? Thank you. Kindly unmute, sir. You're not audible.
Okay, hello?
Hi. Go ahead, please.
Are you getting me?
Yes, we're
Okay,
getting you live.
Thank you very much, and my apologies for being a little bit late. It was not intentional, but it was due to a little challenge I have in joining. In answering your question, I will first start with quoting an article written by Gabriel Real in February 2021, where she highlighted the issue under discussion: gold rush of artisanal mining, crime, and militancy in Africa. So that article highlighted the increasing exploitation or misuse of artisanal and small-scale mining by criminals in Burkina Faso, in Mali, Niger, and other parts of Africa. Now, what can be done for us to integrate this into the mainstream economy? So I will first start by saying, one, we have to see how we formalize the sector by educating all stakeholders on the existing policy, a legal framework, and empower minors to meet the requisite lesson criteria. Now, lessening has been an issue in our region, in Africa, because sometimes the lesson processes do not go with integrity, okay? It rates the wrong group of people having lessons. So a lesson process that goes with integrity is unique in integrating the process. Then we talk about engagement of local communities. apply to criminals instead of the local community. So then we come back to what you just asked, the issue of enhanced political will. I believe that enhanced political will to implement regulations, okay, matters in this process. So, in a nutshell, to set the stage for the debate and questions today, we think that the sector won't have to be formalized. Foreign legal framework that is in the sector have to be reviewed. Engagement with local communities have to take place, and enhanced political work in implementing the regulation. Now, before I turn back to you, I also feel it's an opportunity, okay, for revenue expansion. So most often in our countries, we talk about revenue expansion, they go about increasing taxes. But if we look into this small scale mining and clearing of criminality, we think it will be additional space to increase our revenue base and enhance our own governance process. So before I will start this part and allow other questions to come in. Thank you.
Thank you very much. So we all know that illicit gold trade is happening, not just illicit gold trade. Mineral resources are being illicitly taken, and it, to a large extent, aids financial crimes across board. No country is immune to it. So it's good we're having this conversation. It's very timely, and it would also help to prefer solutions to them and how to enhance our borders, not just one country at a time. Thank you, Mr. Edwin. So I'll move to Mr. Femi. Mr. Femi, how do you combat financial crimes?
Wow, what a question. Good afternoon, everyone. Thanks for having me. So, the question, how do you combat financial crime? Like we say in typical Nigerian slang, that's like a serious jam question. But I think it's the basics are very clear. First is around the culture, either at the national level, at the institutional level, and us as individuals as well. So at the national level, there has to be that commitment from the government to fight financial crime. That's very fundamental. And that's why the government to go along the way and set rules and regulations like the AML Act, set up financial crime agencies like the FCC, NFIU, the police. So they set the standards, the regulations, the agencies at the federal, state, and local government to regulate how we conduct business and how we prevent financial crime from crystallizing. That's at the national level. And it comes down to the institutions as well, not just banks, but across the country. Every organization needs to have policies and standards and code of conduct that prohibits or seeks to stop financial crime from passing through their various organizations. So if you go to a bank, for instance, or any financial services organization, you'll see that they have policies in place that sets at a very high level what the standards are in terms of the kind of transactions they want to do and the kind of customers they want to relate with. They also come up with things around procedures. They come up with training programs, set up processes and systems that are set up to deal with how to prevent, detect, and report financial crime instances. But more importantly, it's about us as individuals. So irrespective of what the government does or what these various organizations do, it's you and I, what are our values as individuals, right? Because what we do as individuals is what then evolves into the organizations we deal with and into what the federal government can do. Look at a bank, for instance. A bank is just a platform driven by individuals on that platform. So if we want to actually deal with financial crime, we need to go back to the basics and the society and how we run ourselves as individuals. There's nothing the government can do. They can set up the policies,
the banks can set up the policies, but it needs the individuals, every one of us, to seek a commitment to deal with financial crime. Anything else, we're just going to struggle with it. So like I said earlier on, it's a difficult and also an easy question to answer as well. Difficult in the sense that it has to be encompassing with different stakeholders playing different roles for us to effectively fight financial crime. But it's also difficult in the sense that it takes us as individuals agreeing collectively and individually that we want to stop financial crime in our own individual space. And once we have that commitment at an individual level, collectively we're able to deal with it. Collectively as organizations we can deal with it. And at the national level it becomes easier to deal with. So that's how I look at it.
Thank you very much, Mr. Femi. I was just smiling in my head like a fish. I gave my Okajam question, but he did well. Thank you. So,
Can I quickly add to that?
Sure.
I think that was a very comprehensive overview, and I wanted to touch on the question with regard to the BADIC status, that all those points that he just mentioned are very, very helpful in order to get out of the gray list, and doing a comprehensive risk assessment to determine where the gaps are that match with the findings, and then create a massive action plan that you can then share with the regulators to show the progress that's being made, and then from a comprehensive standpoint. So I think all the points that just mentioned are very helpful in order to incorporate into an action plan to then hopefully make progress to get off the BADIC gray list.
Thank you very much, Kelly, for the addition to the point. So as a follow-up to the question, Mr. Femi, earlier during the presentation, we saw some statistics that stated that only 37% of fraudulent transactions are being reported. As financial institutions or non-bank financial institutions, what steps should be taken to ensure that most of these financial crimes and fraud issues are being reported timely to regulatory bodies to enable them take proactive measures to prevent them from crystallizing? Because these criminals work in groups. I mean, once one person sees that this thing has gone through in Bank A and they deduct 1 naira, they will team up, they will have meetings, midnight meetings to say, okay, I've tried this loophole and it's gone through, I've deducted 1 naira, let's strike at 2 a.m. Use the same tactics, use the same, enter from the same standpoint, and let's strike. And Bank A to Bank Z, the next day, you hear that this has taken place. Some report immediately. I mean, our regulators have a timeline for reporting some of these things, all of them. So what steps are banks taking to ensure that they are reporting timely if it happens? And if they don't report, what do they think they are doing by not reporting? Are they supporting the financial criminals? Thank you.
Right, so I think it's a bit complicated, right? And I'll try and make it as practical as much as possible. So in Access Bank, we probably do about 8 to 10 million transactions daily, right? And that's just in Nigeria. If I look at other banks like GT, Zenith, across the industry, we're probably talking about hundreds of millions of transactions that go through the bank on a daily basis. And look at the quantum of those transactions, right? Is it possible that every suspicious transactions will be detected? I don't think so in practical terms. And there are different reasons for that.
Excuse me, sir, ordinarily it is expected to.
I'm just being practical. So let's leave the idealistic situation and be practical about it. So that's the number one challenge, the volume of transactions, the sheer volume of transactions we deal with. Then the other bit is around the timing of reporting these transactions. So up until last year, we have 24 hours to report transactions to the NFI. And I'm thinking, right, a transaction comes through. I first need to identify that is suspicious. I need to go back to the relationship team to understand what exactly the transaction is about. Ultimately, I may need to go to the customer to get facts and documents to support this transaction. This thing takes time. So 24 hours is just not practicable. And the challenge we then have is that if you don't report within 24 hours, or you report in 48 hours, and CBN comes for an examination, it becomes an issue. Right? So I'm trying to do the right thing. The timing is not realistic. The regulator is on my case. What do I do? So those are the practical challenges that we have. Then we look at the issue around data. Data is a problem we have not just in banks, but as a country, we have data issues. So things like address verification is a challenge today. So you go to the streets, you can see number 1 here, you don't see number 2, you see number 7. But when you need to understand the customer or try and track the customer down, those are challenges you have to face. These are structural challenges we face on a day-to-day basis. Right? The other thing is about the systems we use. So I've worked in 3-4 banks today, and for some reason, systems that have worked in other banks outside of the country don't seem to work with us. And it comes back to the data quality issues we have. So once data is wrong, irrespective of what systems or platforms you are then using to monitor transactions, there's a struggle. Another challenge again, I'll take about challenges and the potential solutions, is around what is suspicious. So I've had conversations with regulators that the transaction has happened. I know the customer. I don't think it's suspicious based on my knowledge of the customer and the business it does. The regulator comes and insists it's suspicious just by the value of the transaction itself. So what do? I just report all the transactions that I need to protect myself from the regulator to NFI. And they are swamped with things that don't just make sense. So what we have is structural challenges. Institutional challenges from the regulatory perspective. There are all internal challenges as banks based on the volume, processes, and even the people element as well. So I don't think it's a case where banks don't want to report transactions. It's just a case that there are real challenges we have to deal with on a day-to-day basis. The other bit is around what is a negative condition that comes from reporting these transactions. So I've had instances where banks report transactions, and then the bank becomes the subject of investigation. Like we struggle to explain to the law enforcement agency, look, this transaction has happened, I have an obligation to report, and I've done that. But rather than chase the culprit, the bank then gets wrapped up into that conversation. And I'm thinking, does it make sense to report or just avoid the noise and the distraction that comes with this? So these are challenges we deal with on a day-to-day basis. And there are real challenges that we need to solve for us to move forward. The other challenge again is around, if I report a fraud, what does it mean from a regulatory perspective and from a public perception perspective? So these are the real issues we are dealing with. And for us to move forward, luckily or fortunately, NFIU has extended the reporting timeline from 24 to 72 hours. If you ask me, is that sufficient? I don't think so. But at least it's progress. We move forward from 24 to 72 hours. So we're making progress. Other parts of the world, there's 1 week, there's 30 days from the date of suspicion, not over the date the transaction happened. So we're making progress in that direction. From a law enforcement agency, clearly lots of things we need to do better to make it a collaborative exercise. Right? Another good thing is that banks are beginning to invest heavily in technology. So Mr. Gia talked about the baseline AML regulation that CBN introduced and the draft exposure just yesterday. And when they were doing the pilot assessment, they came to us. And we were able to demonstrate a new solution we just deployed. And what did it cost? A couple of millions of dollars. Are all the banks or FIs able to afford it? Practically not. These things are expensive. It requires a lot of investment for us to be able to deal with this issue properly. But again, we're making progress. CBN has come up with a baseline. So one way or the other, everyone has to comply with it at some point in time. And that hopefully will help us manage this reporting issue. Then other bits around people, our culture, we don't like reporting ourselves. That is the reality. So we go to the UK, your neighbor is misbehaving, you pick up the phone and call the police. But that's not our culture. Right or wrong, I don't know, but that is not our culture. So we need to change our mindset and change our value system to solve that people problem as well. What are we doing as banks is do a lot of training around what is acceptable behavior and what is misconduct. And hopefully with time, that message will get passed across. So lots of challenges, lots of progress being made, but clearly we still have a bit of time, a bit of way to go.
Wow, thank you very much. So the rest of us will give...
Can I come in and add a little bit to what you said?
Go ahead, please.
So thank you very much, and thank you for the last speaker. So the question was why only 37% of STRs are reported worldwide. So the first question that came to mind we should ask is whether or not reporting entities or accountable entities or financial institutions should voluntarily file suspicious transaction report or currency transaction report. Certainly not. They are under mandatory obligation to file. I listened to the previous speaker and sometimes from what our guy is like, in terms of reporting the time frame. Now, I shared this short experience. When I was at the head of the FIU in Liberia, we have 7 working days to file currency transaction report and 72 hours to file suspicious transaction report. But I think if regulators like the Bureau of Financial Intelligence Unit step up the game on sanctions and fines from FIs, and then we can see an increase into suspicious transaction report. I give an example. There was a bank who refused to file suspicious transaction report. And the regulator, instead of taking huge sanction that is proportional and dissuasive, found the financial institution $50 equivalent in US dollars. So in my mind, it was telling the financial institution, you don't have to file, a school. So it's in concluding, financial institutions are under obligation to also train the staff to identify what constitutes suspicious transaction report. In some instances, I want to believe that the shortcoming in filing is not because financial institutions may not want to file, but the responsible staff that may not know what constitutes what constitutes suspicious transaction report. So this is why for Nigeria case, with all other FIU, the NFIU are under obligation to do periodic audit on the compliance system of financial institutions, know whether or not that staff are trained adequately, they have the requisite skills and knowledge in identifying what constitutes suspicious transaction reports. Thank you.
All right, thank you very much. All of these panelists have answered follow-up questions to the point, and I would implore our regulators and our law enforcement agencies, going by what Mr. Fene has said, that the financial institutions are not always in support of financial criminals. They are obliged to represent their customers, to process their transactions. However, when they report them to law enforcement agencies or the regulators, they shouldn't take them also to be part and parcel of the customer's business because they do not aid and abet. And I agree with him to a large extent because if financial institutions do that and you victimize them, they will not want to report. And you need them to report so that these things can be stopped at inception and not let it spread across board. So please, we do not want you to see us as participants, but rather as collaborators. And it's good to note that the NFIU has also extended the time frame for reporting. And it's something we've been clamoring for and would like to have it. So I would move my last question to Mr. Tom to say that what is the future proofing of AML frameworks? So as financial crime evolves and technological advancement, what steps should African countries take to ensure that their AML frameworks remain adaptive and resilient against emerging threats?
Okay, I think step one is going to move everything into the cloud. So your database, I think a lot of banks across Africa still have on-prem solutions to hosting and processing of data. It's got to change. I think most banks adhere to GDPR, which is kind of the international standard of data protection. But in order to take the AML process forward, the first thing we've got to do is we've got to secure the data. The only way to do that now is a cloud-based solution. The data protection in Africa is very much better. Regulators in Africa don't want to let their data leave the borders of the country. Even though on-prem solution is a hell of a lot less safe than a cloud-based solution. So that cloud-based solution to data storage and processing is a very, very good start. You then also need to standardize the actual regulation. So you need to standardize the law across all regulators within a specific geographical area and cross-border. So if you want stringent, robust AML processes that are future-proof and sustainable, you cannot have AML that's based on several different types of regulation across the financial service provision in different segments. So we need to standardize it. I think that the other speakers today have touched on the fact that there's a fragmented regulation specific to AML, FinCrime, across the different regulators in Nigeria. The same is true across Africa. So, from African cross-border perspective, the regulations have to be standard across Nigeria, Ghana, and so on. If we want to improve cross-border trade, it has to be standard regulation. And there's lots to model that on. But to future-proof AML, you need a cloud-based solution that processes an AML check in seconds rather than in hours. You need to automate it as much as you can. So, for example, you need to put rules in place that are based on the policy of, let's for example say, in a bank. If I have an internal policy specific to how I want to manage AML, you need to put those rules in place, and you need to let those rules actually do the job. So in other words, if a transaction has been flagged that looks suspicious, you need to actually get the system that you are using to reject the transaction. Or, if obviously the risk-based approach here is paramount, so you need to have a dynamic risk scoring model in order to make sure that your AML process works. Right? So if it's flagged at high risk, then you maybe want to send it to the compliance team to get eyes on, but instantaneously. So in other words, the transaction is not going through, it's going to the compliance team because the rules have flagged it to the compliance team, and now your compliance manager needs to essentially assess this transaction and either approve or reject. You need to do that in the space of a couple of hours at most. So, I think the other thing that you need to do is you need to essentially make sure that you have a database, so a national database that really, really works. So if you're going to use the national database to make sure that you are verifying individuals, that if a transaction happens and the check, let's call it the transaction that is about to go through has taken the actual individual into account and the historical transactions that individual has taken. If you're not doing that, you're going to lose a lot of money to fraud every single time. So I think you have to leverage the national database in that way. You need to make sure that there aren't any duplicates. Femi talked about data being an issue. It's an issue everywhere, but you need to make sure that everyone works off the same source of truth. And I think that's the way that you make automated AML sustainable.
Thank you very much, Tom. So if you see something, say something, irrespective of tribe, religion. Financial crimes knows no bounds, and it happens in seconds. So I presume that is why the regulators expect that those are reported timely before it crosses border. And going by what Tom has said, it is only prudent for us to have a database that fits into each other. That way, we don't need to have the Ghana card, the BVN, the NIN, everybody is bringing his or hers on board. It makes it fragmented, disjointed, and is not coherent. A lot of things get lost in transit, and these people move before you try to even identify it. So those are the take-home from what Tom and Mr. Femi has earlier stated. Mr. Gia, leveraging AI and machine learning for AML. With the rise of digital transactions, I know you're chief for emerging technologies and the rest in NFIU. How can African financial institutions effectively implement AI and machine learning technologies to detect and prevent money laundering, considering the challenges of legacy systems and high false positive rates? So we experience that a lot in our financial institutions, high false positive rates. Quickly,
all right.
please.
Pardon,
Thank you, sir.
before we go ahead, we'll have to wrap up the session, so I hope this will be the final leg that
Sure, please. That is the final leg. Thank you.
Thank you.
Okay, thank you very much. From an operator's perspective, you can hear from Mr. Femi Jayola from the CCO of Access Bank have said the kind of volumes of transactions they deal with. Now, the only thing that is available to be able to help the reporting entities is implementing AI, artificial intelligence, machine learning, to automate, to learn, and so that they continue to fine-tune it to avoid false positives, because when you are dealing with thousands and millions of transactions a day, there is no way it is humanly possible. And challenges have shown that the traditional ways of doing transaction monitoring is no longer tenable. It's no longer feasible. Where you have rule-based, it has to be, because the crime is dynamic. That is why machine learning is very important. Now you mentioned cost. How do we address that? We have to, the government and the regulators will also have to come in to create a sandbox environment for some financial institutions, and that is the same thing we are doing now, even at the FIU. The kind of schema we gave the financial institutions like the banks, we have now scaled down what we gave the DNFBPs. So that is the way to go. We have to find a way of scaling. And even the AI we are talking about, there are different models that can be implemented by smaller financial institutions to minimize the cost, and the sandbox can also be used. So, but definitely AI and machine learning is the way to go to address the kind of nature of financial crimes and fraud activities that are going on in our financial system. Thank you.
Thank you very much, Mr. Gia. Kelly, can you please give us the success stories you have experienced in the course of your work with central banks across borders?
Can you repeat that? The type of work that I've seen with central banks across borders?
Yes, the success stories, so we could learn from them. Thank you.
Sure. So I think I've worked with central banks that have been on the public free lists, that have been removed from the public free list, and I think some of the stories that are most important, I guess, would be training, education, and awareness within central banks and compliance officers in the large banks that are present in the various countries. And I think also that really strong and robust communication with the regulators certainly helps provide a greater sense of trust between the banks and the regulators. So ensuring that there's a person within the organizations that can speak to the regulators and keep them abreast of changes that are being made or issues that are happening. For example, if there's a SAR and it's escalated and it needs to, further addressed, and that it becomes a wider international issue, that I think that type of communication is very essential. And also making sure that there's, I guess, a department or a group that's really tracking the criminals and the bad actors' techniques and strategies, so that these organizations can stay ahead of the anti-money laundering, the fraud, the sanctions evasion, and so forth. And rather than being reactive, being proactive and be on top of the various techniques and strategies that they're implementing, from technology to AI to evasion and so forth. So I think those are all good strategies, and what I've seen really the most helpful approach is training and education and awareness within central banks to provide regular updates on new regulations and laws and cases that have occurred across the world that have been enforcement actions and so forth, so that they're not replicated, and that there can be frameworks built to ensure and mitigate against similar cases from happening within the country.
All right, thank you very much, Kelly. Mr. Edwin, what should we be talking about in the coming year? If we are opportune to attend this event next year, as a close-up to this session, what's the future going to look like in terms of fighting financial crimes across borders? Thank you.
Okay, so we at JABA had just completed our second round of mutual evaluation, and most of our country did extremely well on the technical side. I mean, most of our laws, regulation, legal framework in West Africa are in constant with Factor 40 recommendation. However, on the effectiveness component, we saw most of our countries now doing well. So, as head of JABA, looking forward in the coming years, I am looking to see how we assist member states, okay, on the issue of assets recovery, so that we take profit of the crime. It's time that we work to see how our law enforcement agency, our investigators, financial intelligence unit, how to collaborate with the single goal of taking the profit out of crime. Because I believe, with all certainty, our level of deterrence in the region is a little bit low. So it is time that, now, if you read the national risk assessment of all of our countries in the region, one of the major predicate offenses that they point to is public corruption. So how do we take the profit out of corruption, out of crime, and lead to money laundering, sometimes terrorist financing and things? So looking forward for JABA in the region We will work with member states to see how member states step up the games for assets recovery, aimed at taking the profit of the crime and denying those who survive on the proceeds of crime. In that effort, we have distributed funding to over 12 civil society organizations in the economic governance pillar to start to work with like people at the FCC, other anti-corruption, just make awareness as we get prepared to work with all member states to prepare them for this ambitious program. Thank you.
Thank you very much, Mr. Edwin. I mean, that's the highlight of this entire session, taking profit out of crime. If anyone does crime, the person should have to pay for it. So you're not taking 1 billion and you'll find 100,000 naira. It should hit you hard. A lot of people would carry out financial crime, and then before you know it, the asset recovery says, okay, bring this, bring that, and you go. So I think that does it for me, and I'm sure it also answers all of our questions here. Do we have any questions from the audience, any comments, any suggestions from our regulators, from financial institutions? In the absence of, okay, all right, thank you very much. I thank my highly esteemed panelists for the opportunity to moderate this session. Thank you very much for your time. To Kelly, to Mr. Edwin, Tom, Femi, Mohammed, we hope to continue this conversation outside of this session. Thank you very much for having us. Thank you.
All right, thank you so very much. I know I put you on the spot, but we have one last session before we wrap up for the moment. Please, can we help me upstanding here so that we can have a good picture? Where's my photographer? Where's Mr. Cyril? Thank you. Just like I said, if you do the crime, you should do the time. And you should not do some kind of percentile in terms of somebody steals $1 billion and then you're telling them to pay back 100 million. No. If you steal $1 billion, you should pay back 2 billion. Wherever you find the other billion is part of your own challenges. Okay, let's have a moment so that let's have our moderator breaking up between the two men, or 4 men as the case might be, a pair of them. All right, blessed among men. Ladies and gentlemen, I just had some popular requests and demand that we should just basically go into the last session for the day, and then so that we can all retire for, and then call it a day as a matter of fact, and then go in for the exhibition tour as a matter of fact, so that we can wrap up to get ready for tomorrow. So this next session, ladies and gentlemen, is on the RegTech and SubTech, from borders to bridges, leveraging RegTech to foster trust and transparency in Africa's financial system. And this session is going to be moderated, ladies and gentlemen. Please, as we put our hands together for Dr. Juliet Ongwe, the Senior SubTech Specialist, Cambridge SubTech Lab, all the way from the United Kingdom. Thank you very much. I think you were here with us last year. I remember very well. It's good to have you here. Thank you so very much, ma'am. I'm very sure you want to sit in the middle. Yeah, no, this other one. Yes, because I guess you have 1 or 2 other people who are joining us. Can I confirm if Daniel Okoro is with us? Is Daniel here yet? Okay, I think we'll be expecting him. As soon as he comes in, he will join the panelists. Thankfully, I have Dr. Tunde Ibidabo Obe, the CEO and co-founder of RegFile, is in the house here. Please, can you put your hands together for him? I want to say a big thank you to RegFile. They're one of our supporters. As a matter of fact, I think this makes it all so much more engaging. And then we have 1 or 2 of our panelists who are joining us virtually. We have Karim Elago, the Deputy Director on-site examinations at the Bank of Namibia. Please, can we have him up as a case may be? And then we have finally Alan Blanchard. Alan Blanchard, pardon me, Business Development Director at TSO UK is also joining us. This seems almost like a UK affair, but I know that today, are you also UK? Okay, I wanted to be sure. So do we have them up online? So we have Alan, and then we have Karen. Certainly. So over to you, Dr. Juliet, just as we have spoken, and then hand over to you. Thank you very much.
Thank you very much. It's an honor to be here today again. My name is Juliet Ongwai. as he's mentioned, I work for Cambridge SupTech Lab, and that sits within the Cambridge Center for Alternative Finance. We support regulators in their digital transformation journey. So for us, we're working with regulators to bring in efficiencies in their internal processes, as opposed to RegTech, which is more external. And we support them in a few ways. The biggest being capacity building. We do sit within the University of Cambridge, but we also support with technical assistance in terms of diagnostic assessments, so that regulators can understand where opportunities for SupTech lie. We help with strategy, data strategy, SupTech strategy, and we also help with actually designing SupTech solutions. So our panel today, esteemed panel today, is going to focus on RegTech and SupTech, and the theme is from borders to bridges. So basically, as we are looking at our solutions, RegTech and SupTech solutions, and in general, most of the activities that sit within regulators, they tend to be within national borders. And so I think our goal and our clarion call today is how then can we transition that across borders and have a lot more collaboration. So today we have Karin Elago. So we've worked extensively with Karin. She's a deputy director at Bank of Namibia. She leads the on-site examination. We also have Alan Blanchard. He's the business development director at TSO. And physically with me is Dr. Tunde. He's the CEO and co-founder of RegtechAfrica. We have a fourth panelist, Daniel Okoro, and hopefully you'll be able to join us. So we'll start with you, Alan, and even as you respond, maybe take a minute to talk about what TSO does, and then if you can take us through, so I know you have a lot of experience with infrastructure, financial infrastructure, and regulation, and we know that the biggest concern regulators have with this conversation about cross-border is compromising national sovereignty. So how then are we able to adopt RegTech and SupTech across borders while still having that into consideration?
Thank you. Yes. Hello, everyone. It's a pleasure to be with you all. Sorry I can't be there in person, but thank you very much for accommodating me virtually. So TSO, the stationary office, provides RegTech for regulator solutions, and we're concerned with the drafting, editorial management and publication of rules and regulations. And ideally we want to see that done in a machine-readable, machine-accessible way that makes the drafting of policy a little bit more easy and a bit more digital first, and then the consumption of those regulations much easier. So we want to make regulation easy to find, use, understand and apply. And my background is from 5 years at the Financial Conduct Authority here in the UK, where I published the Handbook of Rules, and was very interested in regulatory technologies back then. We ran a few tech sprints, and I've been interested in making compliance much more of a digital first and less of a manual exercise ever since. So in terms of how that translates into different countries working together and aligning along their kind of regulatory regimes, well, I think digitisation is very much the key for this. I think while rules and regulations are locked away in PDFs, buried in a website somewhere, it's very, very difficult for organisations to understand and compare what different regulatory regimes are doing. But it is very important that those regulatory regimes remain unique, autonomous, sovereign, and that those regulators are allowed to draft rules as ever they see fit in terms of their kind of regulatory environment. And once you digitise those rules and regulations, you can then start joining together those different regulatory regimes, so you can see where those regulatory regimes align, where there are gaps, and you are able to do the analysis on that as more of a data-led exercise rather than a manual exercise with a lawyer sitting there trying to craft a spreadsheet that understands the differences between these regimes. So for me, the key to this exercise is let's make it a digital first regime, and let's get those regulations digitised, let's get that understanding of what those technologies are in play so that we can look and understand between different regulatory regimes what the similarities and what the differences are. But we do not need to compromise what each regulator is doing within those jurisdictions or those countries.
Thank you. From what I'm hearing is let's digitize first, and we don't need to compromise issues such as sovereignty as we do that. Thank you. I'll move to you, Harry. And you probably missed a previous panel that was really concerned about data privacy, especially consumer data privacy. So when we talk about SupTech and RegTech, essentially we're talking about data, a lot of data. And in today's theme, it's calling for us to look at interoperability and cross-border data sharing. How can we as regulators be able to do that without then, or while still protecting consumer data privacy?
I hope I'm helpful.
Sorry?
Thank you. I hope I'm audible.
Yes, yes.
Thank you for the question. Good afternoon to everyone. It's my pleasure to be here. I did catch the tail end of the last discussion, and I think to your question, it's very important, I think from a regulatory and supervisory point of view, to have trust and confidence first and foremost. So these are key pillars in terms of financial stability and the safety and soundness of any regulated financial system. So accordingly, any that we as regulators undertake, including investment in SupTech, even if it's facilitating data sharing across borders, it's important that there's clear transparency, that there's accountability, and that there's public trust. And having clear legal mandates and supervisory rules that ensure that authorities and institutions can apply those consistently or apply those consistent standards around security, privacy, and access across jurisdictions is very important. I think secondly, it's equally important to enact comprehensive data protection laws at a national level. And this should be aligned with best international standards, again, to enhance trust in the manner in which data is being exchanged. And there are good examples, I think, across the globe and in Africa about what those standards could potentially look like. And those laws are essential for not only protecting consumer data, but it's super important to hold regulators accountable and provide consumers with meaningful avenues should there be a need for redress, especially where there is abuse or there is misuse of that data. And I think finally, in parallel to that, it's important to develop cross-border data governance protocols and define the rules for data sharing and set the conditions for data movement across borders. And these should already be embedded in how we supervise cross-border institutions, because it is part and parcel of our mandate in our supervisory function to actually share information in certain instances. So if that is extended to consumer data, it's important similarly to have rules around confidentiality of that data, the purpose and use of that data being proportional in the kind of data we collect, when and why and how we use it. And similarly, any SupTech solution that's designed should then also also incorporate those principles in as far as it concerns security, privacy, purpose-based access, and robust data governance principles.
Thank you very much. I think I have a follow-up question, but I'll put a pin on that. But from what we're hearing is working on
learned a few things. Number one, how we've gotten past that kind of pilot proof of concept stage is that a lot of the local regulators in Nigeria specifically, we're starting to see standards that are being developed. I think a lot of people on the panel today have spoken about the baseline standards that the draft exposure of the baseline AML automated AML solution standards that the CBN released yesterday. Those kinds of things are the things that we need in the industry, because what it is that it gives everybody a starting foundation. For you to be able to play in this space, this is the minimum entry level. So everybody knows what they need to do to get in. Thankfully with RegFile, we've been able to not only hit those minimum levels, but also exceed it. So number one is showing up and being able to hit those minimum levels and standards that the industry expects. Number two is something that is important to me. I think a lot of local context is required. One of the challenges that I know that other providers have found when they come to the African markets is they come with their solutions from another jurisdiction and they try to kind of plug and play within our industry and within our context. There's a lot of things that we have within the Nigerian market, within the African market, that you don't have, for instance, in the streets of New York or the streets of London. And so you must be able to have a solution that is fit for purpose for the environment that you want that system to work in. So when you bring pilots or proof of concept from a different jurisdiction and try to apply it in Nigeria, for instance, that's when you have challenges. We've built our own solution with the local context specifically in mind. And so we've been able to kind of circumvent that challenge. Another challenge that we've seen is one from leadership. In a lot of these financial institutions, unfortunately, I would say all of them, but in a lot of these institutions, you have situations where when you see a new entrant, there's a bit of fear. I think some people have said it before. He said nobody ever gets fired for buying IBM. When you have a solution that isn't really tested in the market, there is that reticence to say, well, you know what, let me just stick with what I know. This pilot, you ticked all the boxes, proof of concept went great, but then they see a name. We've never heard of this company before, and so we're not just going to go with them. So there's that challenge that unfortunately is not something that we as operators in the industry can really influence. It's something that the FIs, the leadership at the FIs, they have to take a strategic approach to try to look for those solutions and give them a chance. And so we're seeing now with certain institutions that we've worked with, when they know that we're a startup, they know that we haven't been around for 20 years, but they've seen the solution, they've seen that it works, and they trust us because we've been able to build up that trust, whether it's during the pilot phase or whether it's during the engagement during the sales phase. So that's something that is important. Another way that we've been able to see that we've gone past this pilot stage is the regulators in Nigeria. I have to give a hand to the NFIU, the CBN, and SEC specifically. In fact, I don't know, Dr. Gia was here a second ago. Dr. Gia within the AML space is like a celebrity. Everybody knows him because what the work the NFIU have been doing in sensitizing the market has been important. The work that the CBN has been doing in not only sensitizing and setting standards, but also importantly, handing out penalties. That has been extremely important because effectively you have FIs, operators in the market that know that it's not just business as usual. They need to sit up, and in sitting up, they need to use a solution. So you need to find a solution provider that ticks those boxes. So for us, when we come in, we tick all the boxes, and they see that if we don't have something, there's a penalty that's potentially waiting for them. They're being a bit more receptive. So those are the ways that we've been able to see as solutions to kind of circumvent that pilot and proof of concept stage.
Thank you. So from what I'm hearing is beyond having the enabling environment, having homegrown solutions and a huge focus on maybe human-centered design, so designing for the context. Okay. Alan, I'll take us back to the theme, which is cross-border. So as you work with different regulators, so for your example would be digitizing regulation, but just in general, as you work with different regulators, how do you go about working with regulators that are at different maturity level? So it's one thing to talk about digitizing regulation, it's another to find and to have the right infrastructure and right capacity to be able to do that. So if we're talking about cross-border, how does that work if your neighbor is at a different level from you?
Yes, thank you. Yeah, good question. Yes, we do work with regulators on that journey, and I have a diagram that I put together, a kind of a digital transformation journey model where you go from working in PDF and putting PDFs on the website all the way along to AI-enabled and AI-powered SupTech and RegTech solutions. And it's important, I think, for the organisations themselves to understand where they are on that pathway and to what extent they want to move from step one to step two. And if the constraint is that my neighbours aren't moving, that's not a very good rationale for deciding not to make that move. And in fact, the rationale tends to be that our regulated organisations and regulated people are finding that our rules are difficult to find and difficult to understand. So this is generally the motivation to get them to move up and across. So there are sort of two stages to this. One is, let's move them through the pathway, and it is a pathway, and you can take those steps one at a time. Can go all the way to the end if you so want, but we generally find that that rate of change is too much. And it's a journey through from changing the format from PDF to HTML for this content, behind the scenes transforming your content into XML so that you can work on it in a much more digital way, and you can create that content using code, if you like, and then you can mark up that content so that when it's distributed onto the website, you can start adding features and functions to it and make it much easier to find, use and understand. And then you can then start building, in this day and age, you can start building artificial intelligence tooling on top of that for really going to the supercharged end of the pathway. Now, the point you raise about what if the organisation in another country has not done that, well, they still have the same problem. They still have the same problem of their rules and regulations being difficult to find, use and understand. So, as I say, we won't let what our neighbours are or aren't doing put the brakes on making those changes. What instead we should do is have the courage to make those changes, and as you well know, we're working with a few jurisdictions around the world who are prepared to take that step and start that journey, which is great. And what we will find is that the momentum then will shift, and they will bring along with them other countries, other jurisdictions to come through, particularly if there's any sort of competitive edge between different jurisdictions, particularly in financial services, where one finance centre wants to be the sort of digital hub, and to sort of be on a par with that financial centre, you yourself have got to create a digital hub to go along with that. So I think we will find momentum achieves equilibrium across these different regimes in terms of the digitisation aspects, but ultimately for the end user, let's say, the regulated organisation or person, it will be a problem if jurisdiction A has gone AI enabled and AI powered, and jurisdiction B is still in a PDF. You're still kind of on a rate limiting factor there. So we have to make sure we're building the correct messages out to the regulators to say this can be achieved, and here are the goals, here are the benefits, here's the so what for you to be able to do that properly. And ideally, everyone around the world continues on that same pathway.
Okay, thank you. So I'm hearing start where you're at least start. And you've talked about something very important, which is the digital transformation journey. And as we look at that pathway, we usually see a huge hurdle, which is on capacity. So I want to come to you, Kari, and talk a little bit about capacity, especially within regulators or lack thereof. And look at, because you've done, within Bank of Namibia, you've had a lot of work in terms of your innovation lab and really putting in the resources to build your capacity internally. So are you able to share with us some practical steps regulators can put in place to build their capacity? Because it's one thing to talk about digitizing and SupTech and RegTech, but when you go on the ground, you find that capacity is is the biggest barrier. So can you speak to how then you as Bank of Namibia have been able to practically invest in building your capacity?
Thank you for that question, Juliet. So I think there are a couple of steps. Some involve costs, but some are low-cost steps that can be taken. I think you've mentioned the innovation hub. So 2 or 3 years back, the Bank of Namibia launched an innovation hub, and the objective was really for the hub to serve as an accelerator for innovation internally, as well as a touch point for external innovators. And I think from an internal point of view, from a capacity building point of view, what was really, I think, successful was onboarding from an institution perspective, everyone onto the thinking of innovation, and really driving the concept of innovation beyond technology, but also making sure that technology is central to our innovative thinking. And one of the things that we did do was allow the institution or the staff in the institution to come up with innovative ideas that they could then implement and deploy themselves and take ownership of in the institution. So that was one. I think a key recent lesson learned in our jurisdiction was really the importance of starting with the self-assessment and specifically evaluating your institution's digital maturity. So we onboarded a service provider to help us assess our digital maturity, but also our SupTech readiness diagnostic assessment that we conducted together with the Cambridge SupTech Lab. And this enabled us as regulators to understand what our current capabilities are and what are the gaps, and then chart a path on how to close those gaps. And that assessment also provides, I think, for a regulator a strong foundation for developing a comprehensive and cohesive SupTech strategy at an institutional level, and not approach SupTech from a functional level, particularly depending on the design and the structure of the regulatory authority. I think it also helps onboard all key internal stakeholders, and it helps secure high-level sponsorship and support around SUPTEC development and SUPTEC deployment. Another important aspect was really creating strategic networks and partnerships with global partners who have the technical skills. So as you mentioned, we partnered with the Cambridge SUPTEC Lab across various capacity building efforts, through development of our SUPTEC strategy, through our diagnostic assessments, but we also engage in solicit technical support from institutions such as the BIS, IMF, World Bank, to sort of leverage on their technical capacity and capabilities. And this also helps us connect with other regulators across the globe to share knowledge and exchange knowledge around SUPTEC solutions and development that could be of interest for us as a jurisdiction. And because a lot of these engagements can be held virtually, it also allows us to involve as many of our people as possible. And where we are investing money in developing SUPTEC or conducting certain exercises like digital maturity assessment, we try to build into those practices a capacity building element where we require that our staff at the central bank participate actively, and that there's a knowledge exchange and capacity building exchange, which is then supplemented by targeted training and capacity building efforts. And I think finally, what has also been impactful and low cost from our perspective was partnering in the country with private institutions, universities, and technical schools to tap into the local talent and research resources. And these partnerships usually help support innovation, not only from their end, but also from a central bank point of view. It also helps build capacity internally and create talent pipelines. So some of the university students end up in the central bank through graduate programs. They get funded by the central bank to study specific technology-related topics or subjects, or there's a collaboration with private institutions to fund and help develop some of those skills. And this also helps develop a broader ecosystem that benefits not only the regulator, but I think from a national perspective as well.
Thank you. And pivoting from that question, Dr. Tunde, it must be really a difficult task every time you enter a room, especially with regulators and similar stakeholders, to broach topics around AI. So are you seeing solutions such as the innovation hubs and sandboxes providing a space for you to collaborate with them? Or what are some challenges you face as you try to collaborate with the regulators and similar stakeholders? And how have you gone about those challenges?
Yeah, sorry about that. Yes, I think in Nigeria, I should say that the CBN and the Securities and Exchange Commission, they need to be applauded for the efforts they put towards that. My company, RegtechAfrica, we actually were the only compliance platform that was in the CBN's inaugural regulatory sandbox. And that engagement, and it's still ongoing, those engagements and those relationships that we've been building there have been critical to the introduction, development of our platform for the markets in Nigeria. So I can say that we are a beneficiary of it. I know the Securities and Exchange Commission, they've had two separate types of sandboxes, if you will, because they had the original regulatory innovation portal, and then very recently they had the accelerated regulatory innovation portal. The accelerated one was specifically targeted towards the adoption of cryptocurrencies, digital assets, and VASPs. And so the effort from the regulator, you can't fault it. I think the challenge is, because every time you can do more, everyone can do more. I think the challenge is that feedback loop. You go into those sandboxes, you engage with it, And to a certain extent, the people within the sandbox, within the portal, they benefit, but kind of diffusing those learnings and knowledge across the ecosystem isn't necessarily happening as much as the people within the ecosystem would love. And so that's one way that I think there's opportunity for improvement. So kind of diffusing that knowledge that, or what is going on within those portals. The next thing from my perspective, and I think it's important that we understand that, yes, innovation comes from those kind of sandboxes, those sandbox environments, but that's not where that's where structured innovation comes from. But innovation can come from everyone within the ecosystem. The regulators can be the leaders within structured innovations, but even startups like us, we can also be leaders in innovation. For instance, companies like our company, we are at the cutting edge of seeing what is going on in the space. We have multiple customers, we see multiple challenges. We should be dealing with those challenges for our customers, but also educating the wider market. That's where kind of thought leadership comes in, sharing reports, sharing things that help the wider ecosystem. So startups, companies can be drivers of innovation as well. It doesn't have to just be the regulators. Organizations like this, like the RegtechAfrica conference, this is where innovation happens. You have people from diverse different walks in life. You have the regulators, you have the academics, you have the startups, you have the FIs. They're all together, and it's being facilitated by an organization like RegtechAfrica. I know the FinTech Nigeria Association also have that. So those are places where leadership in innovation doesn't necessarily have to be tied to just the regulator. I think another space that it could happen is with FIs, with the financial institutions. One of the things that I'm always going to be on a soapbox about is that the FIs should always have a space for innovation within their financial budget. That is the only way that we're going to be able to progress and create companies that can actually support the ecosystem. So, I mean, some FIs, some companies, they have been doing a lot for innovation. I won't drop any names, but I know some people do that. I think we need to see more of that. So it's not just tied to the sandbox. Yes, they are very important in Nigeria. Like I said, we've seen some impact of the sandboxes and innovation portals, but we need more diffusion, and we need other people in the ecosystem to take leadership.
Thank you. I know we are sitting between, I think, the networking session, so I'll give each of you maybe a minute or two to just answer the final question, and I'll throw it out there to you. Taking us back to our theme for today, borders, from borders to bridges. If we were to, no, let me put it this way. What do you think is the most pressing regulatory or systemic barrier preventing us as African regulators from moving from borders to bridges? So a minute or two, each of you. Will start with you, Alan. Why are we not at bridges yet?
Thank you. Yeah, it's another good question. I think that boils down to risk. And I think there are policy risks and legal risks in being too, let me say, interoperable. And I think that's probably the biggest single restraint. Regulators generally are risk-averse organisations, and if they go too fast too soon, this generally is too much of a risk for their appetite. So I would say we need to make sure that we have the policy teams, the policy leaders, willing to do that in accordance with their cross-border counterparts, and then the legal frameworks also need to be in place to facilitate that as well. So once we have the sort of backing, the underpinning of that activity, then the risk appetite, the risk threshold goes up accordingly in line with that. So it's as you say, it's a partnership and a collective working together that will enable us to be able to build those bridges.
Okay, thank you. So there's a risk to being too interoperable, so making sure take a step back and have policy legal frameworks in place before we jump in with both feet. Okay, Karen?
Thank you, Juliet. Very good question. I think Alan has spoken to risk aversion, but another thing is that interoperability requires harmonization. And currently, in African context, and I think generally just when it comes to regulation, there are varying legal frameworks and supervisory frameworks. And some of them are quite complex, or a lot of them are quite complex. And aligning those and harmonizing those takes a lot of work. But that is something that would need to be done in order to be able to create tech solutions that are harmonized. I think another thing is just capacity constraints, lack of skills. A lot of the resources that are required to implement some of these solutions are also the same resources that are responsible for functions of the regulatory mandates and implementing those regulatory mandates. So there's always an issue of prioritization and looking at the core responsibilities, core function of the regulator versus regulators being innovators and implementers of technology, even when there are partners involved.
Okay, so I'm hearing complexities in harmonization, lack of capacity or capacity constraints. Okay. Dr. Tunde, you can close us off.
I will agree with what both Alan and Karen said. I think those are key issues. If I were to just hazard a couple more suggestions on what are the challenges, one of it is also just interest. I think a lot of these conversations are driven by the people in power in these countries. And so, unfortunately, not every time do national interests align. And so, for instance, in Nigeria, we could be battling something like the FX rates, and in Ghana, they're battling something else like the economy, and in Burkina Faso, they're battling something else. And so, we have to understand that these structures live within real political situations, and you can't necessarily divorce those two things. And so we just hope that at some point in time everything is aligned, but the reality is that that is one of the issues sometimes that stalls these kind of things. But Alan and Karen said it very well. These interoperability is the goal, harmonization of legal frameworks, and the like. Those are the ways that we can achieve that. And so we just have to hope that the operators within these countries are able to drive those agendas. And also I think the private sector as well. When we start to see more Pan-African private organizations that are operating with multiple countries and are also driving those conversations forward, we will start to see change as well. It can't always just be the government that is driving these conversations. We have to see the private sector driving conversations as well.
Thank you. Karen, Alan, Dr. Tunde, thank you very much. I think we've had an excellent session. So I'll just hand it back to Cyril. I think we'll still be building these bridges.
Definitely. Thank you so very much, ma'am. Please can you put your hands together for Dr. Juliet? And of course, Dr. Tunde is the two doctors, as a matter of fact. Please can I have the photographer? Where is he? Can you get me the photographer? Where is the photographer, please, so that we can have this moment captured? All right. Just hold on a moment. Okay. All right. So that let's have this moment captured. Please come up front. Okay, with the faces. No. It's all right. Take this one first and take them all closed up. Well, ladies and gentlemen, I know that time is fast spent. This is just about the last session for today. And then we want to wrap up. Tomorrow we want to start as early as possible. But for every single one of us here, please kindly hold on for the ushers. They are going to direct you to where you can have some light refreshment so that we can call that a full day as a matter of fact. Tomorrow we're hoping to start as early as possible. We'll be glad if we're all here by 8 o'clock or 8:30 at most, so that we have 2 or 3 major sessions. And afterwards we will close up so that we can be back here for the finals aspect of the event, which is the award session later on in the evening. And so, ladies and gentlemen, Mr. Dennis, please can you direct everyone upstairs, just give them the direction how we all go upstairs. First, let's have the speakers and the panelists, and then we'll have every other person go upstairs to go have refreshment. I want to say we call it a day. Thank you, ladies and gentlemen. Please be mindful of your personal items, and I'll see you tomorrow morning by God's grace. Thank you, ladies and gentlemen, and thank you for your patience for being here at this point in time. Please follow up the ushers. They will take you to where you have light refreshment, and there is a little bit of a walk, and that will be, especially if you have your delegate pass, please go ahead as the case might be. Thank you, ladies and gentlemen.
AB, drop the transmitter. The transmitter, drop out.
Is it Mr. or Mrs.? I'm not too sure now. Ada Isamade, head of legal units of the Nigerian Data Protection Commission. Is a person in here, please? I need to confirm that. Okay, can I also confirm the presence of Miss Freda Bruce Bennett? I'm very sure, yes, I'm very sure you were in the house. It's good to see you. And of course, Chinedu